बंकर क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरा कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Looking for that in the back.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा।
Welcome to India Market Close on NDTV Profit. I'm Hiral Dadia and with me is Samit Sarkar. Clearly, a day where you're seeing that pressure which is building in terms of markets, because of which that impact coming in on the Indian rupee as well. We'll come to that, but we had at 25,068 cuts of almost 0.9% coming in there. Let's just pull up the intraday chart of Nifty 50 and then we'll look at Bank Nifty and the VIX as well. Is going to be interesting to track over here. But clearly the pressure is building up across. Can we just have the intraday chart of Nifty 50 as well? There you go. We are at the day's lowest levels if you talk about it. 25,041 has been the day's low. Somewhere hovering around those range. That range. And if you pull up Bank Nifty intraday as well, you'll see that similar chart over here at the day's lows again. 58,445 has been intraday low in terms of Bank Nifty. If you look at the heat map, let's pull up that one and then we look at the advanced decline ratio as well. It seems to be pretty even Stevens in terms of reds and greens, actually more of reds versus greens. Dr. Reddy's is holding pretty strong in trade today for a second consecutive session. HUL, Asian Paints will be reporting numbers next week. So there is some momentum there as well, but no major trend that's emerging from the IT pack. It's Tech Mahindra and TCS along with the Infosys, which is maintaining on the borderline. Adani Group of companies trading under pressure. Eternal today is down nearly 6%. Third consecutive session where you're seeing the pressure build up. Indigo is an earnings impact. Cipla, again reacting to what the numbers are looking like in terms of today's session. And if you talk about heavyweights as well, HDFC Bank, yes, that pressure coming in from there. ITC, yes, pressure coming in from there as well. Reliance Industries is another one that we should look at as well. I'm genuinely not able to track where RIL is right now, but there you go, yeah. Almost 1% down in terms of where RIL is concerned. Let's look at the advanced decline ratio right now as we speak, because the VIX is also now pretty elevated. You see the way the mouth is widening. Clearly, almost 2,000 declines versus around 500 advances. Breadth absolutely favoring the bears in trade today. Broader markets and VIX is what we will look at now. Broader markets also. First is the VIX, a 6% up move, but the level is crucial in terms of the VIX. We're at the day's highs of levels almost of 14.31 is what we've hit. That's where we are hovering at. Deeper cuts coming in broader markets. Mid cap 150, 1.5% downtick coming in there. And if you talk about the small cap 250 as well, similar kind of cuts trading at the day's lowest levels. Let's look at NSE 500 components and that will give you a breath of the advanced declines. Adani Green, Adani Energy, Adani Enterprise, major pressure there. Paytm 7.5%, 200 crores is the kind of impact on the potential of what the RBI is not allowing. Poonawalla FinCorp is trading under pressure as well, and that's probably because of their other Poonawallah's commentary when it comes to RCB stake. Syngene International, Eternal, a few of the other ones. What's standing out? Tanla Platforms again earnings, Home First again earnings, Bandhan Bank on earnings is what you're seeing. But again, Hinzink, the upward journey continues. So it's a pretty interesting day of trade. The breadth absolutely in favor of the bears. And the question from here on is, where do we go? Because I think Tuesday is going to be expiry. So probably everything that needs to happen on a Monday is happening today in the market, Somit, because it is going to be a long weekend. And two, probably no negative news in the budget is what the street is watching out for. And that is the only positive trigger that I see right now, apart from the India-US trade deal. Because if you pull up the Indian rupee as well, I mean, record lows once again. Whether the RBI will intervene or not, what dealers are indicating right now is that the importers are buying dollars. 91.90 is what you're tracking over there as well, Somit.
So one more reason why the rupee has also depreciated is because of the sharp fall in the Indian currency, at least Indian markets, Indian equity market. At least that is what the dealer check is indicating. And yes, yet again a painful day for the Nifty 50, below 25,100, below all its key daily moving averages, 50, 100, 200, and from the highest point we have again slipped more than around 1,200 points in trade. But let's also welcome in our guest on the show today. Let's also welcome in our guest on the show today, Jay Bala, founder and chief market technician, and also Lancelot Dicuna, CIO of Value X Wealth. Jay Bala, coming to you first. The downward trend in the Nifty 50 continues. Where are you seeing some support coming in? Because we are now even below the 200 DMA.
Yeah, I had been expecting this market to drop to somewhere close to 24,400, the August low, and maybe slightly below that. But in my opinion, the medium-term trend that began from the April low of 2025 is undergoing a correction. And once this correction ends somewhere below 24,400 or thereabouts, we are likely to see the resumption of the bull trend that we saw between April and July. And I'm still holding the view that the markets are heading to 29,000 in the medium term.
Okay, so Jay, we're looking at Nifty 50 again from a perspective where there is pressure that's building up. And any trigger that you're seeing that could be a good level to watch out for, that, okay, if those are the levels ahead of the budget, there could be some bit of positive momentum on Nifty and Bank Nifty?
On the higher side, you mean?
Yes, on the higher side.
Okay, see, I think the structure needs the markets to drop to the August lows. Only then that's complete. But, from a levels point of view, Reliance holds the key. And Reliance, if it can hold 1350, the September low of Reliance, and that's going to be the crucial point. We need to see Nifty trade about 25,400 for it to see the possibility of resumption of the uptrend. But even that'll still be doubtful. I would rather wait for the markets to. It's looking more and more probable that the markets are heading closer to the August lows of 24,400.
Okay, so what would your top picks be at this hour then?
Cash, hold cash, and selectively short the market, and look at financials, which have done a tremendous job over the last several months. I would say we can even attempt a short at Bank of Baroda with a stop loss of 314. But keep all this, and objective is 276, 270 thereabouts, and I would say keep these short term, because in the medium term I'm bullish. The markets are undergoing a correction. It's a welcome correction, and I don't see any major hiccups coming through for the market in the medium term.
Technically, just wanted to get your view on a stock like Eternal. Lancelot, I'll come to you also when it comes to earnings and overall fundamental outlook. But Jay, Eternal on the charts, do you see more downside?
Of course, it's on the medium term charts. It's undergone important 5-step move, which marks the end of a short term top. So I would look at the stock dropping closer to the mid 2025 low of about 190 odds. And once it's there, then we can reevaluate. But it does look like, with the limited history that the stock has, that the long term could be good, but it has to undergo turbulence in the short to medium term.
Okay, turbulence in the short to medium term. Lancelot, how are you looking at an eternal third consecutive session of decline? And the numbers were good. I think it's mainly an overhang that we are seeing when it comes to change of management. Do you think that the street is unhappy with the change of guard that's happening?
So I don't know whether it's somebody being unhappy with the change of guard, but I think from a valuation perspective, yes, it was trading at a very high valuation. And now that some trigger is there, people are looking at an opportunity to rebalance on the valuation and take profits off the table. And from a longer term investor or a fundamental investor, there's still time for which you can justify it from a valuation perspective. So I think we would see some more correction, and once it corrects to levels where the growth catches up with the price, then one would look at it saying, okay, yes, this is a good probable price to enter. I think it's too early to say that for now.
Right, Paytm is one counter that remains in focus. Now, the stock was down as much as 10% in trade, and this was after the street realized. In fact, the word I'm using realized is because this thing actually happened on 31st of December, but it was the fact that no one knew about it, and that was the reason why the stock never declined. And today the people came to know that PIDF incentive scheme, that is I believe Payment Infra Development Fund scheme. Now, that scheme expired on December 2025. Now, why was this scheme given? The government provided, or what was this scheme actually? Here the government provided around 40 to 90% of the cost of the device as an incentive to promote digital payments in Tier 3 and Tier 4 cities. Now, typically 75% of the payment was upfront, and the remaining happened depending on the activity that the merchant used to get on that device. So this scheme has been expired, and that means that now Paytm won't be getting any funds from the government for this. Now, as per analysts, they were this could have an impact of around 200 crore rupees on their operating profit, but there are few analysts that also believe that the company could simply increase the prices of soundbox rental by as much as 10 rupees, which is just 10% of the current charges, and completely offset this revenue loss that is expected to happen. So it will clearly depend on how Paytm now reacts to this, given the fact that this scheme has already expired on December 31st. But also Paytm came out with this announcement where they are accepting the fact that the scheme has ended, and in the first half of this financial year it contributed close to around 128 crore rupees to their financials. So that is important that we need to watch out for when it comes to Paytm.
So that's going to be interesting. We'll take a question next, but let's also cut across to an exclusive conversation coming in from Davos, where my the managing editor of the channel, that is Tamanna Inamdar, who's in conversation with IOCL chairman A.S. Sani, discussing the oil supply issues amid the geopolitical concerns. Let's listen into that conversation.
Thank you so much for that. We've had incredible conversations right here through the World Economic Forum. And we have the IOC chairman, Mr. Sani, with us this morning at our studios. Mr. Sani, thank you so much for your time to NDTV Profit. Have you had a good WEF this year?
Yeah, good morning and thank you for hosting me here. Yeah, this was a wonderful year, and a lot of conversations around energy, lot of conversations around newer forms of energy, lot of conversations around the continued legacy of conventional fossil energy also. So it's a well-rounded energy conversations that have been there, and look forward to cementing some of the good partnerships here that we have started the conversations.
Was the highlight for you, among other things, the address that US President Trump gave, where he kept speaking about conventional forms of energy? I mean, he kept referring to a green scam, so to speak. As you look at the global energy platform or, picture right now, how do you look at it, Mr. Sani? Do you think oil is making a comeback, or there is going to be a waning of conventional forms of fossil fuel?
Look, I perceive this problem in a very different manner, because I see it from the lens of the country of India. For India, this non-fossil forms of energy or the newer forms of energy, which happen to be low carbon energies also, low carbon polluting energy forms also, they are a godsend opportunity for a country like India. Because in oil terms, you know that around more than 85%, 87% of my crude requirements we are importing, and we are spending around $130 billion per year as a country for importing those crude oils. And if the kind of energy growth India is needing and the kind of growth that India is perceiving in the next few years, if we continue on the same trajectory that we hope that we will continue, then I will have to spend hundreds of billions of dollars every year going on importing this crude oil and moving on the same path. For me, these alternate forms of energy are a godsend opportunity for at least adding all the new energy requirements to coming from these renewable forms of energy, the energy which is coming in a cleaner form. Maybe it is in forms of EV, it is in forms of bio, it is in forms of nuclear, it is in forms of all other kinds of energy other than fossil. They are good for the country like India. So whatever the world thinks, we should catch on to this bandwagon, and we should move ahead on this alternate sources of energy.
No, India is clearly charting its own path through the entire situation in the last 1 year. And as a country that imports crude, the good thing for us is that crude prices have been very soft. Despite some, flare-ups when there's something happening in Venezuela, Russia, Iran, कभी ना कभी कुछ ना कुछ हो ही जाता है. But we have been okay. How have you been navigating this as someone who runs a large oil corporation?
We have been constantly on the endeavor to increase the sources of crude that we are procuring from outside. And crude prices are only one aspect of the whole matrix, I'll say. The cracks have been varying. Although we can't complain on the types of cracks that are going right now, with diesel at around $18 to $20 and gasoline at around $10 to $12. We can't complain, but we have seen better days also, and we have seen worse days also. So that is also a part of the matrix. The situation is good. Situation is satisfactory because of the crude prices that are being there, and the reasons for crude prices being there where they are is the supplies demand factor. Today, the supplies are available all across the world. The newer forms of the newer areas, the newer geographies that are coming up, that is Brazil, that is Colombia, that is Guyana. So these are all opening up for newer geographies. Today, I can tell you that India was procuring, last 5 years back or so, we were procuring crude from around 27 geographies. Now we are procuring from 41 geographies. So we have expanded our span of procuring crude, and that is what gives me a sense of stability in my energy security.
It's part of a strategy to de-risk, right? You don't want to be dependent on a Russia or an Iran. Percentage of imports from Russia for you have come down significantly?
They are based on commercials basically. They are on a very moderate phase, I'll say that.
But if I were to compare from a year ago?
Moderate, very moderate.
No, so say halved, 7,
because
3/4.
I don't want to talk about all the companies because it is you are talking of India. I don't want to comment on that. But they have been on a downward. They have been on a downward
spiral. So there's no stress there. I would say, Mr. Sani, actually we should, and viewers watching right now should commend the strategy that oil corporations and the Indian PSU space over here has had to navigate all of this. In terms of what it has meant for profitability of these companies, and I know you're in a silent period, so I will not ask you about your profitability, but marketing margins on a year-to-date, on an annualized basis, have been pretty solid because of dropping crude prices despite the rupee. Is it in the 8 rupee mark or thereabouts?
No, you are referring to GRM when you talk of marketing margins. They are, in our parlance, refinery margins and marketing margins are different ball games. But I understand what you are referring to, and I will not comment on the figure, as you have rightly said that we are going to declare our quarterly results in few days, so I can't comment on that, that is for sure. But what I can show that I can be very sure in telling you that the kind of transformative journey that my company is taking in last 9 months or 1 year, wherein I am trying to improve my costs on transportation, on supply chain, whole ecosystem supply chain, the cost on processing of crude in my refineries, increasing the efficiencies of my refineries, reducing the energy consumption in the refineries, reducing the CO2 emissions that we are doing for the environment. All this is going to give me a substantial benefit in terms of my profitability, because everything, all of these, some of the actions have been completed. They will be giving results in next 6 months or to 12 months, and some of them will be a long-term projects which we will take up for improving the efficiencies. They will take 2 to 3 years also. But in nutshell, I am saying this company is on a path wherein it is going to improve its operational margins and its operational efficiencies will improve.
Yeah, and we have been seeing that also quarter on quarter. And this is also part of Project Sprint, isn't it?
Yes, Project Sprint is basically working on customer focus. It is working on cost consciousness. It is working on strengthening my core business. These are the 3 C's. And then the company has to be transformation ready. The company has to nurture the talent, and the company has to be technology ready. So these are the 3 T's. The 3 C's and the 3 T's, they comprise the sprint. And these are the 6 priorities on which we are working. We are working very assiduously on developing the talent for us, because the talent line, the pipeline of talent, what we are targeting today is not only for Indian Oil but for the industry also, because our people have been great leaders going forward into other companies also. So we are developing them for not only for us but for the industry also.
Absolutely. Just as an outlook for the rest of the year, and I think asking anyone for an outlook on what 2026 calendar year is going to look like geopolitically is tough. But having said that, do we possibly see a situation of a large unlocking of supply from Venezuela? That has been the big question mark. Huge reserves, very little contribution, I think 1.5% to world supplies of crude. Do you think that we see a large unlocking? What does it mean for India? What does it mean for a company like yours? Do we have the capability of refining the kind of crude that Venezuela could produce?
If you are talking of 1 year horizon, I don't see much of the effect. But okay, long term, maybe what happens 2 years down the line or 3 years down the line, that is in the realm of future. That we should not predict on that or speculate on that. But 1 year, I don't think it is going to be major, because the quantities are less. Lot of investments will be needed for bringing up that crude onto the market. So, and whatever crude is being produced, in my sense, most of it will be getting consumed in Gulf Coast of US only, and maybe some other areas. But at the same time, I can say that several of the Indian refineries are capable of processing those kind of crude. So technically we don't have a problem. I can speak for the private sector refineries also and for the public sector refineries also.
Is there an opportunity for our industry at all, or is it not going to make an impact?
It may happen. It may happen. Sometimes some opportunities can come, and we should be ready for that.
Okay. Thank you so much, Mr. Sani, for speaking with us. It's been delightful chatting with you in the cold air of Davos.
Thank you so much. Thank you.
Right. Before going to Lancelot on IOCL, Jaybala, any view on Paytm on charts?
See, Paytm has broken down from a head and shoulders top. So, it's likely to go around the 1,000 mark at least. So, if you're long, be very cautious. This is not a good setup. And there is pronounced negative divergence at the top. So, this is likely to undergo a slightly deeper correction in the short term. So be very cautious, don't be long.
Okay, so that's with regards to where Paytm goes. But moving on, we've already spoken about Indigo so far, because clearly in terms of the quarter, it's a strong adjusted, overall strong adjusted for one-offs is what we've indicated. The stock is at the day's lowest levels. Revenues are up around 6%, and the EBITDA, adjusting for the forex loss, is down around 5.5%. Margins at around 29.8% versus a 30%. I would love to get Somit's view on this. In the meantime, he's just looking at Laurus Laboratories as well right now. So I'm just taking the opportunity to look at this one. Profits, again, a downtake of around 78% to 540 crores, and we've seen a loss of around 2,449 odd crores in the previous one. Overall, in fact, it's the slowest third quarter revenue growth that we've seen since FY21, and this was the year when COVID had hit. However, the revenue is better than what the estimates are, which has led to the overall beat. In fact, let's also listen into what the management had to say, because they've said that the exceptional loss owing to the new labour code was around 968 crores and due to flight disruptions stands at around 577 crores. The PAT would have been 3,130 crores, excluding the one-off impact and the forex loss so far. Let's listen into the management.
We are currently estimating mid-single digit percentage increase in our unit cost, excluding fuel and forex, for the full year 2026 as compared to the full year 2025. This revised guidance is based on the revised capacity estimations. We are estimating an early to mid-single digit moderation in our unit passenger revenue as compared to a high base of the same quarter last year, which had a very strong tailwind in the form of religious congregation for the Mahakumbh.
Well, if you look at the Laurus Labs number, 1,778 is the revenue number coming in, as against the street estimates of 1,637. EBITDA has come in at close to 481 rupees as compared to 439, that was the analyst estimates. Margin coming in at 27% as against 26.8% estimates, while the net profit number, that has come in at 250 crore. Analyst estimates were close to 190 crore. Strong beat looking on all the fronts for Laurus Labs, and that is one of the reasons why the stock has perked up around 2% even in such a weak market. We are yet to get the finer details here for Laurus Labs, but it seems to be a beat on all front, with strong beat coming in at least on the profit front. 250 crore is a profit number that has come in as compared to 190 crore that the street was anticipating. Now, one of the reasons behind this could also be lower tax structure, but we have to get to those details. But yeah, overall it seems to be a good beat so far when it comes to Laurus Labs. Lansdowne, any view on CDMO companies like Laurus Labs? Divi's is yet to report numbers. Laurus Lab has reported a strong set of numbers.
Yeah, I think the strong set of numbers is actually very helpful in terms of an outlook on this company. But if you look at valuations, despite the strong set of numbers, the stock still trades at almost 60 times its forward earnings. And while there is this is one of the sectors that we continue to see strong growth, a growth potential. One needs to probably wait and see, at what levels one can look at buying it, because in case there are a couple of negative quarters, then the stock could get re-rated significantly, and probably that's the time one can look at accumulating this stock.
So that's the view coming in on Laurus Labs. I think for them, finance costs have significantly come down from 57 crore to 38 odd crores. But overall costs have gone up by 13%. Yet there's an uptick, slight uptick in the margins that we're seeing for Laurus Labs, and that's why the stock, up and above in trade, almost 3% as we speak. But shifting focus, we have Somit, of course, with us, who's going to give us all the chatter that he's been hearing from the dealing room. Somit, what are you picking up today?
Quiet. Not too much activity yet again in the market.
I think lots of activity on the downside. 2 months
right? Downside. But yeah, the thing is, at this kind of levels, people are not that courageous to even short market from the current levels, because it has fallen a lot. Yeah. And technically, there's no reason as such other than global factors.
But don't you think, Somit, that the global markets overall, if you see the way Europe has opened up, the way US was, there is some bit of stability at least at the global markets.
But Indian market does not seem
exactly. It's only our markets which are correcting right now.
Right.
Secondly, Monday is a holiday, which is again an extended week. So probably because Tuesday being a NSE expiry. Expiry game and rollovers are happening today itself.
Could be. That could also be the game, given the fact that it's a long weekend coming in. So yeah, that could also be one of the reasons why we are seeing this kind of a downtick in markets. But few stocks that dealers have highlighted. Firstly, a bunch of mid-cap IT names, Emphasis, Persistent and Coforge. Dealers indicate that there are some buy flows coming in all the three names at the lower level in trade. And delivery volumes are expected to be on the higher side for these counters. When it comes to Voltus, there are buy flows on the large HNI desk. Dealers are expecting strong Q3 numbers coming in from this company. And lastly, when it comes to Hero Moto, there are sell flows on the PMS desk. Dealers expect weak Q3 numbers coming in from Hero Moto, and hence this selling pressure coming in for this counter as well.
Okay, so interesting names there, Mahima.
I think Voltas has been seeing good gains. It did touch an intraday high of almost 4% in trade today, but right now seeing gains of about 2%, has cooled off a bit. Jayabala, your quick view on something like a Voltas, not much in terms of where volumes stand, but seeing some momentum in trade today.
Yeah, it's a very uninspiring chart. It's gone sideways and it's been stuck in a range between 1520 and 1180 for the last several months. And it's in the short term slightly negatively biased. So I wouldn't see today's bump up as a big positive, but it's probably going to be meandering within this range of 1520 to 1180. So it's an avoid at the moment. No clear structure in the short term. Maybe it's probably needs one more drop below the 2025 low for it to complete a correction. Not clear at all.
In terms of where the direction stands for Voltas is the view coming in from Jayabala with regards to where technicals are concerned. But earlier today we spoke to Nimal Jain, the founder of IIFL Group, about the IIFL's tax evasion controversy that surfaced last year in February. The founder says that there has been no evidence of tax evasion whatsoever. Listening to exactly what he said.
So when the search happened, which happened last year in February, that happens with the suspicion of tax evasion, but the suspicion is not a conclusion. So when they get the documents, data, and they find something immediately, then they make the firm declare, which did not happen in our case. So obviously there was no evidence of a tax evasion at that point in time, which is obvious.
Okay, so that, was the clarification coming in from IIFL Finance, which after being in the positive has slipped into the negative as well. But as we slip into a short break, let's also listen into the management of Bandhan Bank, where the stock was seeing some smart moves, whereas Syngene, which has gone ahead and cut the guidance, and that's the reason why the stock is trading under pressure. And the clarification came in only on NDTV Profit. Let's listen into both the managements as we get into a break.
So asset quality, definitely it has improved. One thing is that we have taken I would say a very important step this time. We have sold almost close to 3,200 crores of assets to one of the ARCs. And this has definitely given a one-time reasons. Of course, we have got a hit in the profit and loss because of making higher provisions, because that our PCR on account of this almost is at the same level at 83% if we include the write-offs. And we wanted to maintain that provision coverage ratio. So we have taken a hit in the balance sheet, but we decided that we should cleanse also our balance sheets, which were piling up with the NPA, especially in the EEB segment, that is the microfinance segment, right from the days of Corona. So we have got rid of those assets. We have been able to sell it to our ARC company, where we have also invested in the SRs.
In the light of, the ongoing challenge in the single large molecule, which I think has come in, a little bit higher than we anticipated, we will be making, an adjustment to our guidance. The guidance, on revenue, we will be adjusting that from a mid-single digit growth to a degrowth in the 2 to 3% range.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
Ladies and can be shaky footage, guys. So good news for that.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर
Welcome back. You're watching India Market Close here at NDTV Profit, where while markets are not, at all positive right now, there's one counter that's zooming in trade on the back of its earnings, and that's Laurus Labs. And we have Varsha joining by, who tracks this very closely. Varsha, good improvement in terms of where margin stands, net profit also up 1.7 times. What has led to this?
Well, I would say, a strong set of numbers that Laurus has posted, beat estimates on all round. Revenue is up 25%, EBITDA is up almost 68%, margins at 27% versus 20%, and good uptick in net profit. Now, let's see what are the key highlights, what has led to these numbers. One is the strong growth that you're seeing is, of course, led by CDMO space. Everyone knew this. The next leg of growth for Laurus Lab is, of course, CDMO. And there was also robust performance which was led in generics division also. The EBITDA that you're seeing, the strong gain in EBITDA is because of due to improving operating leverage. I would say the investment that the Laurus did in the last 1 or 2 years, now they are enjoying their fruits when it comes to the EBITDA margin, when it comes to the revenue growth. While if you see that they've delivered gross margin expansion of over 4.3 percentage points to 60%. This was led by the better product mix. Also, if you see the outlook for FY26, they're well on track to deliver healthy operational growth. Now we need to see whether this performance of 26 to 27% of 25 to 26% of margin will they do in Q4 also. But one more thing, the lower tax rate also aided profit because the estimates were around 190 crore of profit, but they delivered almost over 250 crore of profit. So lower tax has also helped that. And lastly, if I were to talk about the FY26 capex is expected at around 1,000 crore with no equity dilution planned, and the ROC is expected over 25% over the next 2 years. So overall, a strong set of results. This was expected, but they have beat the expectations as well.
Their own medicines are working on them, I think, Varsha. That's what it seems like right now. But clearly, Somit was just pointing out, after hitting that high, the stock is again just corrected from the day's highest level. So it actually tells you what the markets are actually looking at. In fact, in terms of the outlook for 26, what they've said is that they are on track to deliver healthy operational growth, as Somit has been pointing out, for Laurus Laboratories, and that's what you should focus on. But your stock is under pressure. In fact, we have Neeraj Diwan as well, who's joining in. Neeraj, your view when it comes to Laurus Laboratories, who's posted numbers right now. A good set of numbers, but the stock is corrected. And to add to that, you have a Cipla also, which has reported their numbers.
Yeah, good afternoon. See, I like the space. CDMO is growing very well for most of the companies. I like the CDMO API space. But see, Laurus Lab, to comment on Laurus Lab, the results are good, definitely. but then the stock is expensive. So at these levels, they're going to be profit taking. You look at other stock in the listed space, which into similar space, they're available at much better valuation. So I like the space, but I would rather look at some other opportunity in the space.
Okay, so that's the view coming in with regards to where Laurus Labs stands. But let's quickly also try to pull up Cipla as we speak, because the pressure for Cipla has started, and with regards to where Achin Gupta, the successor, is going to take over from 1st of April from Umang Vora, management is kind of talking about that. The stock is down 4% in trade today at its low point as we speak. But Neeraj, before we talk more about that, your quick view on Cipla?
Medicine provider.
The results were not good, so I think that is why the stock is correcting. But I think it should be an opportunity, because over the medium to long term, definitely there are a lot of other things that will happen for the company, and there will be a lot of other drugs they're working on. So this is an opportunity, I think, for a medium to long term investment.
Neeraj, I'm just going to interrupt over here. Just give me 2 minutes, because we have the Cipla management who's speaking at the press conference. Let's listen in to what they have to say, and then we'll talk about your views.
Consumer business, where we continue leading on multiple categories, and the profitability also keeps improving with economies of scale and better efficiencies. If I then move to our second largest business, which is North America, we delivered a top line of 167 million in the last quarter. As I mentioned, this had a small contribution from lenalidomide in Q3. Base business delivered a double-digit YOY growth, and several products did well. Albuterol continued to hold number one position. We had a market share of 22% as of last week of December. There was some challenges which came our way. Lanreotide, one of the prominent products, faced a supply challenge following the US FDA audit of our partner Pharma. We are working together with them on the remediation efforts, and we expect supplies to resume sometime in H1 of FY27. Meantime, the product will be in limited supplies based on clearance of existing lots. And we're also looking at enabling an alternate site together with the partner. What's exciting about our US business is the pipeline. We're making good progress on that. There are 4 respiratory assets that are under assessment and nearing approval. We believe 2 of these we could have a sole generic opportunity with quite a significant material upside. On peptides, we now have approval for generic Victoza, and we expect to launch 3 more peptides in the coming financial year. So our new launches would provide us strong sustainability on top line as well as bottom line. And while Lena revenues taper off on the business, we would expect a good continuity of growth in the business. On South Africa market, the private business outperformed the market 6.3 versus 5.7 for the market. We did see a temporary destocking at the channel at the end of Q3, but this will normalize in the coming quarter. EMU, happy to say that they delivered 4th consecutive quarter of 100 million plus revenues with 7% YOY growth in USD terms, supported with strong execution both in DTM as well as B2B markets. And I think important to also mention that on regulatory front, we are expecting re-inspection of Indore facility anytime now. So if I then move to an update on the profitability, we have reported 18% EBITDA for the quarter. This is a little bit lower than our internal plans, approximately 1.5 to 2%. A few reasons. One, as I mentioned, Lanreo, we had supply challenges towards the end of the quarter. Also, we continue to invest strongly in R&D. We put in 7% investment to sales on R&D, and we have some very exciting assets in the pipeline, including the filings that we are doing on complex oligonucleotides. Additionally, we incurred certain operating expenses in the quarter on account of preparation of the upcoming respiratory launches. So most of these are in the nature of one-offs. We are excited about the pipeline that is coming in. And I think I am personally also excited about the quality and capability of the teams that we have. So we really look forward to a sustainable growth on top line as well as profitability as we continue to serve patients around the world. With that, we will open the forum for questions. Thank you.
Thank you. All right, so that was the management speaking about what lies ahead for Cipla. But Neeraj, do complete your point. You were talking about Cipla.
So that's what I was saying, but the management also mentioned that there is a strong pipeline for the company. So the stock is corrected and there was expectation of not so good results, plus the inspection which happened. So I think because of that, stock in the last 6 months has corrected from 300-400 rupees. So I think this is an opportunity for medium to long-term investors. So in the shorter term, maybe there may be some more impact, but medium to long term, there will be strong pipeline. There will be definitely good growth that will come for the company.
Okay, so that's with regards to where Cipla goes. Osho, the correction that we are seeing when it comes to Cipla, the reaction that you're seeing when it comes to Laurus Laboratories, all are event-driven right now. Any trade that is emerging on these two names?
For Cipla, firstly, I think obviously the counter has seen very strong beating from the high zone of nearly 1480. But at current levels, it is not advisable to exit position for those who are already holding the stocks in Cipla because it is at historical supports of 1300. So I'm expecting that in the coming period, once the counter stabilizes, then from here onwards, we can look for opportunities on the longer side. But at present, if someone is not holding a position, there is no advice in Cipla to accumulate or to exit from the current levels. On the comparison with Laurus Labs, this counter has been one of a strong performer, and with the correction in the recent month, the counter have now tested the 100 exponential moving average. So I'm expecting that now it might hover within a range of nearly 1000 on the lower end and 1080 on the higher end. So that is the immediate trading range for the counter. If it breaches beyond the zone, then we can see some kind of continued momentum in the coming period. For now, 1000 is a very strong support levels and 1080 is the resistance that one can expect in this counter.
Shifting focus from pharma to solar manufacturing space, a big face-off between Waaree Energies and Premier. Waaree Energies reported a strong set of numbers, Premier a weak set of numbers. What are the differences? What is the reason? Let's get in Varsha to understand the same.
Well, thank you so much for that. You know, today we are actually comparing two companies in our bull versus bear case. Let's talk about starting with the Q3 FY26 numbers for Waaree, which is, you know, a volume leader. There was a massive growth when it comes to revenue, 119% year-on-year growth, while for Premier it was only 13% growth, and hence Premier was down in trade today. You know, talking about EBITDA surges for 167% for Waaree, while 15% year-on-year growth for Premier Energies, and the net profit, if you see, was up 118% for Waaree, and with the margin improvement of around 25%, while it has an industry-leading EBITDA margin at 31%. Talking about net profit, was up 118% versus 53% jump in Premier Energies. Now, let's discuss about both of the. If I were to talk about order book, massive order book at 60,000 crore versus 8,000 to 10,000 crore of order book when it comes to Premier Energies. Now, let's deep dive. Starting with Waaree Energies, why the numbers were so strong. One is the unmatched execution and global reach, and the first Indian firm to sell 1 gigawatt plus modules in 1 month. Talking about, they have a 32% overseas revenue, which focuses on high realization US markets and expanding manufacturing to capture inflation there also. Also, if you see, they are investing almost $30 million in Oman facility for a future traceable supply chain. Now, talking about the fundraise, so they've recently raised 1,000 crores of fund for battery energy storage and inverters and hydrogen. Now, moving on, if I were to talk about Premier Energies, it's a a technology and capacity focused company, and then higher focus is on solar cells, and hence the margins for Premier is 30% versus 25% for Waaree, which is into modules. They are also targeting 10.6 gigawatt cell and 11.1 gigawatt of module capacity by September 2026. Even if you see, they are also on to large scale utility projects and IPPs within India. Moving on, if I were to talk about why Waaree numbers were explosive, one is 1 gigawatt per month scale up allows Waaree to absorb cost very efficiently, number one, and higher prices in US market versus India drove 118% PAT growth for Waaree Energies. Plus, if you see 60,000 crore of order book signals much faster trajectory than peers. Now, if I were to talk about Premier Energies, why Premier Energy is a specialist when it comes to margin. One is higher ratio of cell manufacturing versus modules makes Premier Energy focusing on cell, which is a higher margin product, and hence 30% of margin for Premier versus 25% of margin for Waarees. Even if I were to talk about that defense segment, which provides high margin income regardless of solar price shifts, number one, and also if you see the overall, if I were to talk about, if I want to, differentiate between Waaree and Premier, of course, Waaree is in focus considering a volume game that Waaree is playing versus Premier, which is a specialist when it comes to margin. But considering today's sell-off in Premier Energies, Waaree has given a very strong set of numbers considering the production of modules, while Premier has been into 30% margin scale only.
All right, Varsha, thank you so much for getting us those details and completely helping us understand as to how these two are different and what is causing the pain in one and what is Waaree Energy is doing better in terms of fair that is in fact reflected in the stock as well in terms of how the financial performance has fared. But Osho, I'll quickly come to you on both of these counters. I mean, clearly the street has given its verdict with regards to where Q3 stands, but in terms of a technical stance, where do you find the charts more attractive right now?
But technically, both the counters are looking very bleak, but comparatively, Waaree Energies are having better technical formations as compared to Premier Engineering, because Waaree, we have seen a kind of a retracement from the lower end, from the oversold terrain. There has been a decent traction in the last two trading sessions. So that is an initial signal of reversal in the counter, although conviction still lacks because it is below the 20-day exponential moving average, but comparatively, it is looking better than compared to Premier. So overall, I'm expecting if it sustains above the zone of 2650 to 2680 kind of a zone, then in the coming period, we might see some kind of respite or pullback in the counter towards 2900 odd levels. So I'm expecting that this counter might perform the other counter in the short-term period.
Osho, just wanted your view when it comes to. Okay, sorry, yeah, the chart was not loading. Just wanted your view when it comes to Syngene. The stock has nearly hit the lower circuit of 10% odd. Fundamentally, obviously, they have cut their guidance and the numbers were weak. But on charts, any support levels?
Technically, there is a strong support around the zone of 530 to 520 odd levels, where we have seen a very strong consolidation in the previous year from the zone of nearly 530 was tested around 20 from 2020 towards 2023. So this has been a very strong consolidation zone for the counter. So I'm expecting that till it sustains above the zone of 520, the concerns remain subsides. But again, if there will be any kind of further breakdown below 520, then there might be some kind of disruptions in the coming future. So for now, I'm expecting that another 20 points of loss or 20 points of fall can be seen as a healthy correction or can be seen as an even opportunity for the counter. And on the higher end, again, 600 is a very strong resistance. So 520 to 600 is the trading range for the counter.
Sona BLW is another company that has come out with its earnings. If you look at the revenue, it's up 38%, but it's the margin pressure that has been acting up. Hence, that's the reason the stock is down nearly 4% in trade. Margins have come in at 24.7 as against 27% last year. And if you look at the EBITDA number, that is also up around 26%, but margin pressure is something that has led to the fall in the share prices of Sona BLW. Right. Any view on charts here, Osho?
Yes, the counter is having a kind of a consolidation around the short-term moving average, but overall, I'm expecting that in the previous 2 months, the counter was trying to emerge above the 200-day simple moving average, but again, there has been a kind of a correction. But overall, the counter is into a consolidation, long-term consolidation zone. So I'm expecting that if it breaches the zone of 475 to 480 on a higher levels, then only one can look for buying signals in the counter, and from there onwards, we can even see some kind of momentum coming back in this stock. While on the lower end, again, it is having a very decent support around the zone of 440, 430 odd levels. So this is the support zone for the counter. No doubt there might be volatility in 1 to 2 trading sessions, but I'm expecting till the time it is respecting the zone of 430, there is no sign of concern in this counter.
Right. And what would be your BTST views, Osho?
It is very difficult in such market to have a BTST view.
And any STBT view?
STBT is also very, very.
I mean, it's fair, I think, taking the 3 days holiday.
No, but I have a stock in my radar, but that's not for BTST, but for positionally, it is looking very positive. HUL is one of the counter which is looking very positive to me. So being from the FMCG space, there has been some kind of defensive stock in the name, and HUL has even outperformed the market in today's trading session. So I'm expecting this counter can see some kind of outperformance in the coming period as well. So HUL will be the buy recommendation with a strict stop loss of 2350, and 2350 has respected its support zone. So I'm expecting that it might not breach in the coming period. And from here onwards, there can be a strong upside rally in this counter. So HUL will be a positional bet. Immediate target is 2460, followed by 2480 from positional 1 to 2 trading sessions.
So positive momentum expected in HUL from Osho. Neeraj, I'll quickly come to you on HUL as well as GCPL, the first FMCG company to post its earnings today in this quarter. The expectations are that profit, of course, growth will outweigh the revenue growth, but revenue growth is also expected in that high single digits. Your quick view on both of these counters?
Yeah, I'm positive on the consumer space. So I think that, of course, short-term impact will be there because of the results. But over medium term, also, I feel that FMCG is a space one because it is defensive. Second, because the inflation has been low, so raw material pressure is not there. So margin improvement can happen. Plus, GST benefit will also come their way for this full quarter. So I'm positive on these two counters.
Okay, so that's with regards to where GCPL goes and HUL. But you know, Ola, let's pull up that one on the screens because there has been some bit of pressure over the last couple of trading sessions on Ola Electric, and with the third quarter results right at the corner. What's in store for the balance sheet? Puneet is here with more details. Puneet, today as well, 3% downtick. And if you pull up a 5-day or a 1-week chart as well, that will tell you the kind of pressure that has been created on this one. 12 to 13% is the kind of value erosion that investors have already seen. What are you picking up?
Well, it's also very close to its 52-week low of 30 rupees per share as well. And the big headline is that the company could actually cut its guidance in FY26 for sales volume. But there have been some other bad news as well in this particular month itself. So the first biggest takeaway is that, its CFO has resigned. He was one of the key voices in the earnings conference call as well. So it's definitely one that has impacted the company and led to the recent downtick on the stock. The second key takeaway is that there are expectations of a weak Q3 earnings, and we'll get to that in just a bit. While the third one is that the market share has fallen to an all-time low of just 6% in January this month. So it's on a year-to-date basis that we are doing the first 23 months of this month. And 6% is compared to almost 35% that the company used to do almost just 12 months ago. So it's a sharp downtick that we've seen across market share. And promoter selling on the back of this at the end of December was another key trigger. But in terms of the Q3 sales data, that's another key aspect. For FY25 last year, Q3 was almost 84,000 units. That slipped to just 35,000 units. So there was a downtake of almost 58% on the downside. So minus 58% is what the number was. Apart from that, the Q3 preview is something else. Revenue is expected to fall by 41% to almost 615 crores, with margins expected to be EBITDA loss actually be of 180 crores and a net loss expected of 389 crores in this particular quarter. Finally, what brokerages have also cut target prices unanimously with Kotak Securities as well as Ambit being the lowest of 25 and 30 respectively. But the guidance cut is what I want to finally highlight before I wrap up. they had mentioned a sales guidance of almost 2.2 lakh units for FY26. This was cut from the earlier guidance at the start of the year of almost 3.7 lakh units. But given the company's 9th month sales performance, it seems a very bleak picture. Even from 2.2 lakh target, they've only resounded to around 1.4 lakh sales units, and hence there could be an impending guidance cuts either in Q3 or Q4. But that's the picture on Ola Electric and in the profit intelligence segments. A weak picture and a weak outlook altogether.
Okay, so that's with regards to Ola Electric. Neeraj, your view when it comes to your EV makers, Ola, Ather, all of them. The month probably has been slightly weak. How would you look at trading on these names?
Yeah, actually, I'm not too positive on the two-wheeler space also right now. So because there's been some pressure lately, but if I have to go for a two-wheeler space, I'll rather not go for something like Ola Electric or Ather. I'll rather go for something like a TVS, which is present into electrical two-wheelers also. So I think there TVS would be the best bet as far as investment is concerned.
Right. Neeraj, quickly your view when it comes to a counter like DLF. Yes, obviously their cash flows were strong. They have become debt-free. But pre-sales number coming in at 420 crore as against estimates of 2,500 crore. Plus lower number of launches going forward, which will definitely have an impact on growth numbers, right, going forward?
Yeah, actually, this year, I think the guidance that they gave about 22,000 crores kind of a pre-sale, it's looking difficult for them to achieve. So last year they were able to, go past the guidance. So definitely there is some pressure in NCR territory, in Gurugram, where they are predominantly present. And that because of that pressure, you saw the numbers, the kind of pre-sale that they're doing for the quarter. So I think the short-term pressure is definitely there, but if again for a medium to long-term perspective, DLF, the kind of lease rental that they are targeting for in 2 to 3 years, and the kind of launches that are scheduled over the medium term are massive, and there may be 1 or 2 quarters blip here and there, but over the medium to long term, definitely the story is still intact, and they are almost debt-free, gross debt-free. So that will, in the longer term, I think once the cycle reverses for real estate, I think then one can have a look at this counter.
At this moment, in the real estate basket, any stock that you feel is attractive?
See, I would say DLF is also attractive for a long-term investor. There are other stocks also in the NCR market.
Then I would not say attractive. Would it be a right time to buy, or there could be more downside from here on also?
I would say that one should start accumulating. One should not be going all out and buying them, but I think these are good prices to start accumulating real estate stock.
Okay, so that's with regards to where DLF goes. Osho, let me take a quick question with you on real estate, because that was one of the top losing sectors in trade as we opened up for trading in today's session. And there seems to be some bit of weakness that is building in. One of the worst performing sectors of 2025 has been one of the worst performers at the start of 2026 as well. Are you seeing any opportunity on the charts, or do you say that the momentum is just downwards, best time to sell?
See, overall, there has been substantial increase in trading volume once there has been breakdown in majority of the real estate counter. Coming to DLF, there has been a decent breakdown, firstly around the zone of 680, then the zone of 620, and now I am targeting a short-term target for nearly 545 for DLF. So, and in this correction, there has been increase in trading volume. So there has been a strong conviction on the selling side for the real estate space. So I am expecting that in the short-term picture, yes, there is a bleakness on the technical charts and there might be further correction. But once these counters reach towards the oversold terrain, which some of them are already into the oversold terrain, then there might be some opportunity to start accumulating. But again, that in a staggered manner and not at current levels with the current scenarios going on. So one should wait for them to get stabilized at lower end and then may look for buying opportunity, but again in a staggered manner only.
All right, so that's the view coming in with regards to the entire real estate pack. With that, Neeraj as well as Osho, thank you so much for helping us with all of those stocks insights and of course taking out the time and speaking with us at NDTV Profit. Quickly, if you can see as to how the markets close today, of course, Monday being a holiday, the markets kind of have seen pressure throughout the day. 25,000, below the 25,100 is where we are ending at right now. Almost 1% down on the Nifty 50. The Bank Nifty also down by about 1.3 odd %. Broader markets also, there is no respite there. The mid cap 150 down by about 1.7%. The small cap 250 also seeing a downtick of about almost 2% at the end of the trade. Quickly, if we can pull up the Nifty 50 heat map and see what are the counters that have really seen pressure in trade today, and what are the counters that have actually kept Nifty in the check. You have Dr. Reddy's up 1.6%, although did go to almost 3% higher in trade today. Tech Mahindra up 1%. ONGC, HUL, some counters in the green. But on the flip side, you have counters like Eternal, Indigo, Geofinance, as well as Cipla, Axis Bank, SBI, Tata Consumer, as well as Power Grid, Maruti, HDFC Life. So, I mean, I can go on and talk about all of these stocks which have tanked almost 2% in trade today, but that's the reality. We are, not seeing any positive momentum. Quickly, if we can also see the India VIX, because, at the start we saw India VIX seeing great overall, gain of about 3 odd %. But with regards to where the India VIX goes, it's seeing, that kind of tells you the volatility in trade today, and we ended at that 7.7% mark. Let's also quickly pull up the BSE 500 and see as to what are the counters in the broader end of spectrum. Look like you have Home First Finance, Tanla Platforms, both in the green on the back of earnings, up 6% each. Hindustan Zinc on the back of fundraise, up 4%. Infibeam, Bandhan Bank, some counters in the green on the back of earnings. But on the flip side, you have something like Syngene International tanked 8%, and how something like a Paytm down 8% as well. Poonawalla FinCorp as well as Balaji Amines down 6% each. Quickly, advanced decline ratio before we wrap it and go to the cues that you need to watch out for. The gap has widened throughout the day with regards to where advanced decline ratio is concerned, closing at 1900 declines versus 500 odd advances. Lastly, in terms of where cues that you'll be watching out for throughout the day, you have India bank loan growth YY coming in, deposit growth YY also coming in. So data of this will be out this weekend. Foreign exchange reserves data will be out. US S&P Global Composite PMI data will be coming out. You can keep your eye out for that. S&P Global Manufacturing data will be out. Michigan inflation expectations will also be out. So these are some of the things that you'll be watching out in terms of where the global markets are concerned. But some of these names also seeing interim dividend announcements and of course cutoff dates for all of these names like Persistent Systems, United Spirits, Wipro as well as SRF. You have lock-in expiry for something like a Gujarat Kidney at 6%. Companies that will come in terms of earnings post market hours, you have Bharat Petroleum, Godrej Consumer, IndusInd Bank, all of these big names reporting their earnings. India Cements, Nuvama, Prime Focus as well as something like a Welspun Specialty. Also companies like Chandni Petroleum, Axis Bank, Ultratech as well as Kotak Mahindra. Asian Paints of course will be posting its earnings on Tuesday. WeWork, Spandana Spurti, Marico etc. will be in focus next week. So that's with regards to where some of these companies stand in terms of where earnings will post. But Adani Green has released its Q3 numbers showing steady growth in operations and profitability. The management has also issued a press statement outlining the company's performance and outlook. Let's listen to what they had to say.
I'm delighted to share Adani Green Energy's robust operational and financial performance for the first 9 months of fiscal year 2026, underscoring our relentless growth trajectory and industry leadership. Our energy sales surged by impressive 37% year-on-year, reaching 27.6 billion units. This robust growth is a direct result of significant greenfield capacity additions and strong plant performance. Our operational capacity expanded by 48% year-on-year to 17.2 gigawatt, reinforcing our leadership as India's largest and fastest growing pure-play renewable energy company and putting us firmly on course to achieve 50 gigawatt target by 2030. In calendar year 25, we added 5.6 gigawatt of greenfield capacity, which represents nearly 14% of countrywide solar and wind capacity addition. Our landmark Khavda project, the world's largest renewable energy installation, continues to advance at an accelerated pace with an operational portfolio of 7.7 gigawatt of solar, wind and hybrid assets. We are on track for deployment of one of the largest single location battery energy storage project in coming months. Our hydro pump storage project on Chitravati River in Andhra Pradesh is also on track. Our industry-leading financial results further reflect our operational excellence. Revenue from power supply increased by 25% year-on-year to rupees 8,508 crore, while EBITDA grew by 24% to rupees 7,921 crore, achieving an EBITDA margin of 91.5%. These results are powered by advanced technologies and digitized operations, leveraging sophisticated data analytics, machine learning, and artificial intelligence for real-time monitoring, enabling superior operational performance. Adani Green Energy's commitment to sustainability and responsible business practices continues to be recognized globally. We have been named the world's #1 green utility in the 2025 Global Top 100 Green Utilities ranking by Energy Intelligence. AGL is top sustainability performer in power generation sector for second consecutive year in NSE sustainability ratings. As we look ahead, we remain steadfast in our commitment to India's energy transition by enabling large-scale adoption of affordable, clean energy. Adani Green Energy is powering sustainable growth for India and the world. Thank you.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बनके खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Look these for that in the back.
watching Market Express with me, Shreyansi Singh, and this is the show that gets you all the headlines that you need to know at this hour, including the ones that you may have missed. Let's get straight to the show then. Let's take a look at the markets. First things first, you're looking at another volatile session on Dalal Street as markets saw choppy trade after a good start in the opening session. Now, when you take a look at the benchmarks, Nifty and Sensex ended with near 1% cut, while broader markets saw deeper cuts as both mid and small cap indices also ended with almost 2% in terms of the downtick there. Let's quickly take a look at the sectoral picture as well. It was in fact a sea of red across sectors that you're looking at. Realty stocks witnessed sharp selling as well through the day as realty index ended with over 3% fall as well. When you talk about public sector banks, they also dragged in trade. And you do have the PSU bank index that ended with over a 2.5% cut. So that's something that you're looking at as well. And that's the sectoral picture largely that you have at hand when it comes to some of those sectors. Let's also talk to you a little bit about the rupee, in fact, that weakened. That weakness seems to continue as the local currency has hit a record low of 91.95 against the US dollar today. Now, this, of course, comes against the backdrop of global turmoil, rapid FII selling and uncertainty around the India-US trade deal. So those are some of the factors that you're looking at that were a key drag coming in when it comes to the rupee. Let's also talk about Paytm. Let's get a little stock-specific talk about Paytm. That was down about almost 10%, 9.5% downtick coming in for Paytm. That was under pressure after a key revenue lifeline snapped for the company. And the RBI's PIDF scheme, which bought digital payments infrastructure and contributed 20% to Paytm's operating profit, expired in December with no renewal in sight. Now, a 200 crore rupee annual hit is something that you're looking at looming, and the industry is preparing for what comes next, tighter margins and possibly higher prices as well when it comes to merchants, and you can see that clearly being reflected in the stock as well. 9.6% downtick coming in. As far as Paytm is concerned, let's also talk to you about some of the other stocks. Then Cipla was the one that was in focus on the back of its third quarter earnings. Cipla reported a weak set of numbers when it comes to the third quarter. Profit fell sharply as you do have higher costs that hit performance. Let's also talk about the revenue that was largely unchanged, but operating performance actually softened and margins narrowed through the quarter. Now, what you're also looking at when it comes to Cipla is that the company was also impacted by a one-time expense related to the new labor codes, which further dragged down its bottom line. Overall, though, Cipla in fact ended the quarter on a slightly subdued note with profitability under clear pressure despite a stable top line, and that in fact was what was being penciled in. When you take a look at the counter, that was down about 4% in trade, and previously, before the numbers were reported, of course, it was tepid, not doing all that much, ended the day with a cut of about 4%. That's Cipla for you. But talking about Laurus Labs, then posted a strong set of numbers in the third quarter with net profit nearly tripling to 252 crore rupees. Revenue grew over 25%. EBITDA jumped nearly 70% as well, pushing margins up to 27%, reflecting that little bit of robust performance that you have across its business segments. So that's a decent performance across segments that you're looking at when it comes to this particular counter. But let's keep it going with our coverage of earnings as well, because you do have Shriram Finance that was also in focus, reported a sharp 29% thereabout downtick coming in when it comes to the net profit, coming in at 2,522 crore rupees versus 3,570 crore rupees last year. Meanwhile, when you talk about the calculated NII, that actually grew 18% to 6,574 crore rupees on a year-on-year basis. This is in fact signaling continued strength when it comes to their core lending operations. The stock wasn't doing all that much at close, but the company is also preparing to raise funds via NCDs and bonds, reinforcing its capital position for future lending and refinancing needs. So that's something that you're looking at when it comes to this particular counter. But let's also keep it going with some of the counters that were in focus on the back of their earnings, and it's actually Interglobe Aviation that was in focus here. Posted a better than expected third quarter, even as revenue growth slows to its lowest since the COVID period, rising to about 23,500 crore rupees. Net profit in fact stands at around 550 crore odd rupees as well, weighed down by that one-off cost that you're looking at. That's been a common factor across some of these companies, and you're looking at that one-off cost being at 1,500 crore rupees when it comes to this particular counter. Excluding these exceptional items, though, you do have the profit that jumped to over 3,100 crore rupees. The airline adds 24 aircraft this quarter, while free cash falls noticeably. That's very important because this is the biggest drop that you're looking at for this particular metric in nearly 5 years, and that's Interglobe Aviations for you. But let's also keep it going with this particular counter because there's actually a bunch of brokerages that have written notes when it comes to this one. Morgan Stanley sees opportunity, calling the stock overweight and highlighting strong profits and an attractive valuation here. Now, on the other hand, you do also actually have Investec that remains cautious, maintaining a sell rating, pointing to weak results and rising costs that could slow growth. So that's something that you're looking at when it comes to Interglobe Aviations. But let's also keep it going with some of the other counters that are in focus on the back of their earnings. So it's actually Premier Energies that is in focus on the back of a mixed quarter that they've delivered. Revenue came in softer than expected, but profits still managed to beat estimates. The company, in fact, benefited when it comes to the lower taxes, which lifted the bottom line. Its order book remains healthy, and during the quarter, it also commissioned a new 400 megawatt solar cell facility, adding to future capacity, which is going to be a key focus here. Operational performance is something that you're looking at that improved modestly with slightly stronger margins, and overall profit also saw a solid jump coming in here. So that stock, though, was down about 7.5% on the back of that revenue miss that we've highlighted earlier. So there you go. That's one particular counter that was down and out in trade. But let's also talk to you about Syngene International that was also down and out in trade, reported a tough quarter hit by inventory corrections and one-time labor costs. When you talk about the revenue here, though, that has actually dipped slightly, but profits take a sharp fall with net income plunging nearly 90%. On the brighter side, though, you do have the company extending its partnership with Bristol-Myers Squibb through 2035, showing long-term commitment in its collaborations. But it does look like the street wasn't really impressed with that cut coming in to the tune of about 8% when it comes to this particular counter. So that's something that you're definitely looking at when it comes to Syngene International. But let's also be talking to you about a bunch of brokerage notes. Actually, let's put the spotlight back on brokerage notes because you do have Citi upgrading Aditya Birla AMC to a buy, raising its target to 900 rupees. Now the broker highlights stabilizing market share, improving equity fund performance and reduced redemption trends. Now you do have strong sales here in terms of the efforts being made when it comes to sales. Sustained performance are also expected to drive assets under management higher, making the risk reward outlook favorable when it comes to this particular counter. So that's something that you're looking at when it comes to brokerages. Let's keep it going with the brokerage story, though, because you do have Jefferies maintaining a hold when it comes to Eiffel Finance and trimming its target to 600 rupees. But the story isn't all somber because you do actually have Q3 numbers actually beating expectations, powered by surprisingly low provisions. But there's actually a twist here that you're looking at. Tax authorities have called for a special audit, a move that could hang over the stock in the near term as well. Meanwhile, on the business front, you do have gold loans that glittered, driving growth. NIMs inched higher and credit costs came in better than the forecast, offering a bit of shine amid the uncertainty. Let's also talk to you about Coforge that posted a mixed quarter with revenue up slightly but profits down sharply by over 30%. EBIT and margins show marginal dips, while the company also announces an interim dividend to the tune of about 4 rupees per share, offering some relief to investors amid slower earnings growth. Let's also talk to you about Tanla Platforms. Now, this is one counter that has actually delivered steady growth this quarter, with revenue crossing the 1100 crore mark and profit inching higher. The company says that momentum was strong across key metrics, with both its business segments continuing to perform well. Most of the sequential growth actually came organically, driven by higher wallet share from existing clients. Tanla is actually also sharpening its focus on Wisely.ai with fresh investments aimed at building solutions for telecom operators and large enterprises. Overall, a stable and broad-based quarter for the communications tech player is what you're looking at. Sharpening focus on AI, though, and that's one particular story that's quite important here. But let's also talk about Bandhan Bank that is showing signs of a steady comeback this quarter. Asset quality has actually improved sharply, with gross NPAs dropping to 3.33% from over 5%, while NII slipped 5%. Provisions are down 16%, giving the banks some breathing room. And you did have Street also cheering that with a 4% plus uptick coming in here. Margins inched up with NIMs rising 6 basis points to 5.9%. Loan growth came in at a healthy 8.9%. And when you talk about the brokerage view here, the brokerage verdict actually is quite cautiously optimistic. CLSA calling it a decent quarter after tough ones, while Macquarie maintaining its underperform rating, but does see NIMs improving in the coming quarters. So that's a little bit of an update coming in as far as the brokerage verdict also is concerned. When it comes to Bandhan Bank, that particular counter was up and away in trade. Talking about up and away, let's talk about Swan Defence that secured a $227 million order for 6 chemical tankers from Europe's Reederit Sternsen as well, with an option for 6 more vessels. The first tanker is expected to be delivered with 33 months, marking a significant boost when it comes to the company's order book. So that's an update coming in on the order win front, but let's also talk to you about one particular counter that was in focus. Sun Pharma getting its DCGI approval to manufacture and market a generic version of semaglutide injection. The drug used for chronic weight management is going to be launched after the existing patent expiries, boosting the company's portfolio. When it comes to the entire therapy segment, the stock wasn't doing all that much, but of course it was in focus on the back of this particular approval. Let's also talk to you about Zaggle Prepaid Ocean Services that has inked a major 3-year pact with HDFC Ergo General Insurance as well. Under this agreement, Zaggle will be providing its Propel Rewards, an engagement platform that is a digital solution designed to manage structured incentive recognition and partner engagement programs as well. So that's something that you're looking at. When it comes to this particular counter, the collaboration actually strengthens Zaggle's presence in the enterprise reward space while giving HDFC Ergo access to a specialized tech-driven reward system. And the company in fact says that the deal is fully domestic and not a related party transaction. So that's something that you're looking at on the deal front. They've also said that they're ensuring full compliance with governance norms. So that's the update coming in here. But let's also take a look at Ixigo. That has reported its lowest revenue in 5 quarters, down about 13.5% in trade. Lowest revenue in 5 quarters. Other than that, revenue is very important to be looking at, because you do have EBITDA that rose 23 odd percent. You did have a rise coming in as far as the revenue is concerned, but that milestone in fact didn't cheer Wall Street, didn't cheer Street at all. Margin saw a slight dip, 8.3% compared to 8.9%, but the bottom line was strong with net profit jumping 56.8% to 24.3 crore against 15.5 crore year on year. So Dalal Street wasn't really cheering that, down about 13.5 odd percent. That stock for you. Let's also talk to you about Sona BLW that posted a mixed quarter with revenue up sharply by over 38%, while net profit remains flat at 151 crore rupees. EBITDA rises over 26%, though margins dip slightly. The company also declares an interim dividend of 1.6 rupees per share. Let's also shift focus to some business news coming in terms of some updates, though. You do have platinum prices that actually surged to a fresh all-time high as investors rush towards safe haven assets. Amid growing uncertainty in the United States, the metal touched an intraday record of around $2,684 an ounce, driven by a weaker dollar and nervousness over US economic and trade policy. Now, at the same time, there's demand that has outpaced supply as well when it comes to platinum, a metal that is used in a wide variety of sectors. So, a tale of two triggers managed to scale up platinum onto that record high. Let's also talk to you about Amazon that is preparing for another major round of job cuts, with thousands of corporate roles expected to go next week. The move is part of the company's plan to trim around 30,000 white-collar jobs overall. Amazon already cut about 14,000 roles in October, and the next round could begin as early as Tuesday. The cuts are actually likely to hit teams across Amazon Web Services, Retail, Prime Video, and Human Resources. And TikTok has struck a last-minute deal to keep operating in the United States, setting up a new majority American-owned joint venture to avoid an outright ban. Under the agreement, TikTok's Chinese parent, that is ByteDance, will cut its stake to just under 20%. Meeting US legal requirements as well, American and global investors, including Oracle and Silver Lake, will take control of the new company. TikTok says US user data and its algorithm will now be protected through stricter security and oversight. The deal follows years of political and legal pressure over national security concerns. And former Google and Airbnb executive Piyush Ranjan, who also served as CTO of Walmart-owned Flipkart, and Mukesh Bansal, co-founder of Myntra, on January 23rd, launched Fermi.ai, an AI-first edtech startup focused on high school STEM education as well in India and the United States. The startup, which has emerged from the Meraki Labs ecosystem, is headquartered in Singapore and operates through subsidiaries in India as well as the US. And you do have Fermi.ai that is available for free on the cloud as the company remains in a pilot and product discovery phase. The launch comes at a time when the edtech sector is recalibrating after a funding boom and bust cycle, even as generative AI tools, the likes of ChatGPT, become deeply embedded in how students study. Alright, then moving on, let's talk to you about Nokia Corporation that has expressed interest in setting up a global capacity center and additional research facilities. And Karnataka Industries Minister M.B. Patil said the telecom major discussed expansion plans during meetings with the state government on the sidelines of the World Economic Forum in Davos, which is where all of the action is. Nokia, which already runs its largest global R&D center in Bengaluru, is also exploring opportunities in Tier 2 cities. The Karnataka government has assured full support for the company's future expansion. The talks underline the state's push to attract high-value technology investments. And on to some national news then. Prime Minister Modi has flagged off 4 new train services in Kerala from Thiruvananthapuram, including 3 Amrit Bharat Express trains and 1 passenger service, officials said. Now, the trains linking Thiruvananthapuram to Tambaram and, to Charlapalli as well, and also to Mangaluru and Thrissur as well, Guruvayur passenger, are expected to strengthen regional rail connectivity across southern India. So that's an important update that you're looking at there. Modi's address highlighted the role of improved transport links in boosting economic activity and access to services. The event, though, also coincided with the inauguration of broader development projects in the state. And tell you what, with that, it's a wrap on Market Express. Thank you so much for tuning in.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
can be shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या खुद पे
Market ends close to 1% lower, with Nifty closing a little above 25,000 levels. The Sensex falling over 750 points. All sectors finish lower. Nifty Realty loses the most. Broader markets underperform the benchmarks. Rupee weakens further to a new record low of 91.96 against the dollar as a result of the global turmoil, rapid FII selling and uncertainty around the India-US trade deal. Experts say today's sudden fall in the markets also weighed on the Indian currency versus the greenback. Q3 earnings in focus. Laurus Lab reports more than 100% jump in profit, with Cipla's profit drops, while Cipla's profit drops by around 57% on the back of one-time exceptional loss. Meanwhile, Shriram Finance reports a 29% fall in profit, with net interest income gaining 18%. Interglobe Aviation's share plunged over 4% after reporting 577 crore impact of Indigo's flight disruptions on its Q3 profit. New labour codes dragged the profit by 969 crore rupees. IIFL Finance shares fall nearly 18% after receiving an IT department notice. Company tells NDTV Profit that search happened in February last year and no evidence of tax evasion was found. Sun Pharma gets DGCI's nod to manufacture and market generic semaglutide injection. Company will launch the weight management drug after the patent expires. Karnataka High Court revokes the ban on bike taxis subject to conditions that the state may impose. Uber Rapido welcomed the court's decision. President Trump sues JP Morgan, files a $5 billion lawsuit alleging the bank shut his accounts over political vendetta. JP Morgan says the suit has no merit and it did not close accounts for political reasons. Trump posts on Truth Social about Greenland, says a structure for is being worked on and it will be amazing for the US. Welcome, this is Profit 360 on NDTV Profit and I'm your host Mahima Vachajani. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's take a quick look as to how the markets did today. Both the benchmark as well as the broader markets did close in the red, of course. The benchmark Nifty 50 closed almost 1% lower. With regards to where, the Nifty 50 heat map is concerned, let's try to pull that up because a lot of counters kind of led to that fall in the Nifty 50. You had counters like Eternal facing immense pressure in terms of where the stock is concerned. Indigo, Cipla, as well as something like a Geo Finance, Axis Bank, Bajaj Finserv, all of these counters ended in the red by about 2 to 4% each. On the flip side, you have counters like DRL, Tech Mahindra, as well as something like an HUL, which kind of kept the Nifty in check and held the Nifty above that 25,000 levels, but we did close below the 25,100 levels. With regards to where the broader markets are concerned, the mid-cap 150, let's try to pull that up. closed around 1.72% lower. The small cap 250 also closed by about 2% lower. With regards to where the BSE 500 is concerned, let's try to quickly pull that up because it was a very stock-specific market. So you had something like a Tanla platform, Home First Finance, buzzing on the back of earnings, gaining strongly up 6 to 7% each. Something like a Bandhan Bank also up on the back of its earnings. Hindustan Zinc on the back of fundraise. Soba as well as Infibeam seeing gains of about 2 to 3% each. But on the flip side, you had counters like Paytm, which did see a downfall of around 8%. Poonawalla FinCorp, Balaji Mines were some of the counters which did see pressure anywhere between that 6 to 7%. So that's with regards to where the markets are concerned. But rupee's weakness continues as it has hit a record low of 91.96 against the US dollar. Now this comes against the backdrop of global turmoil, rapid FII selling as well as uncertainty around the India-US trade deal. The rupee plunged to a fresh all-time low as dollar demand from corporates and importers outweighed early moves and compounded existing pressure on the currency. In fact, we did have a phoner on this, Anandya Banerjee, who is the SVP of Currency and Commodity Research of Kotak Security, tells the reason as to what is the reason behind this fall. Listen in.
Indian rupee is already one of the weakest currencies in Asia. So whenever there is a sharp fall in the equity market, it is seen as a kind of a signal where the speculators come and short the rupee, especially in the option. So that also adds to the pressure. So only when the RBI will step in aggressively, we will see a turnaround.
And do you expect Reserve Bank of India to step in? Because a couple of days back, I believe they had stepped in. And again, after that, we are seeing this kind of a downfall. Multiple analysts are saying that the worst is over, but it doesn't seem like.
Right. Actually, RBI, yes, the RBI generally tends to step in whenever there is a 80 paisa to a 1 rupee move, like almost we have seen today. So we would see the RBI step in above the 92 levels. But what is happening is RBI is not selling very aggressively. They are not continuing the selling. They are coming to the market, selling dollars, and then going away and letting the market dictate the price. Because I think as long as the trade war is on, they will continue to use the currency as a tool to fight the trade war.
All right, so that's the view coming in with regards to why we did see rupee hit record low. But the other counter that remained in focus today is Indigo. The share price crashed over 4% in the day after Q3 earnings. And for the quarter, December ended, of course, 2025, reported a 77% drop to the 550 crore against the 2,500 odd crores in the same period. Now, the low-cost airline did take a one-time hit of 1,547 crores. This includes an exceptional loss of 969 crore owing to new labor codes and a loss of 577 crore due to the flight disruption and regulatory penalty of around 22 odd crores. Laurus Labs was also in focus today on the back of its numbers. Did come almost at the end of the market close, but it's time to look at how the earnings fared in terms of the numbers. This pharma major had a good Q3, beat across metrics. Net profit nearly tripled from 92 crore in the same period last year to around 252 crore this time. Operational efficiency stood strong with over 68% rise too. Let's get in my colleague Varsha to give us more details as to how Laurus Lab fared. But before that, the stock also ended 1% higher in terms of where the trade stand. We'll shortly get in Varsha to give us more details on Laurus Labs. But Godrej is another counter where the numbers came in just post market hours in terms of where the numbers stand overall. Q3 financials, consolidated sales saw growth of around 9%. In terms of constant currency, the growth was at 7%. Underlying volume growth at that 7% odd. Standalone volume growth at 9%, where sales grew by around 11% odd. For Indonesia, underlying volume growth grew by mid-single digits and sales degrew by around 3% odd. Overall, EBITDA stood at a growth of around 21.6%, and consolidated net profit also saw growth of around 14% odd. The company, of course, has declared an interim dividend of 5 rupees per share. So that's with regards to where overall The stock that is in focus, that is Godrej Consumer, which will be in focus on Tuesday, of course, because Monday is being a market holiday. But next on our list is Shriram Finance. This is a large cap deposit taking NBFC that had a tough ride in Q3. The company's profit dropped over 29% to 2,522 crore as opposed to 3,570 crore last year. However, on the positive side, the net interest income witnessed an annual growth of 18%. At that 6,574 crore mark, but the street did not get that quite. But the street did not get, quite impressed with these numbers, and the stock ended almost flat with a negative bias in trade today. Sun Pharma is the other counter that remained in focus, has secured approval from India's drug regulator, that is DGCI, to manufacture and market a generic version of semaglutide injection in the country. The injection is indicated for chronic weight management in adults and is meant to be used along with a reduced calorie diet and increased physical activity. Sun Pharma will market the product under the brand name Novel Treat and plans to launch it after the expiry of the semaglutide patent in India. The DGCI note follows the regulator's review of a phase 3 clinical trial conducted in India. Earlier today, we spoke to Nirmal Jain, founder of IIFL Group, about the IIFL tax evasion controversy that surfaced last year in February. The founder says that there has been no evidence of tax evasion whatsoever. Listen to what he said exactly.
So when the search happened, which happened last year in February, that happens with the suspicion of tax evasion, but the suspicion is not a conclusion. So when they get the documents, data, and they find something immediately, then they make the firm declare, which did not happen in our case. So obviously there was no evidence of a tax evasion at that point in time, which is obvious.
All right, on to our segment from Davos. Our managing editor Tamanna Inamdar spoke to Yezdi, the CEO of KPMG India. Let's take a look at that conversation.
Davos is a place for thought leaders to exchange ideas, and of course the theme this year is the spirit of dialogue. But the biggest question on everyone's mind is how this dialogue will take place in the face of so much uncertainty. You know, this is the one conversation point we have to start with when we're speaking to people, and Yezdi Nagpurwala, the CEO of KPMG, is with us. Yezdi, we're at a very interesting location, and I don't know if you can spot it in our camera. We're outside the USA House, which is at the English Church. And all of the action, the queues outside, all of the action really is about what Trump is going to do, what it means for the world, the USA and Europe talking about fresh tariffs. What does this mean for India? We've seen some impact on the markets, but where does India stand in the middle of all of this?
Hi, Tamanna. Let me just say, to begin with, I'm facing the mountains. So yes, you are right. The entire theme is the spirit of dialogue, and which is the main objective of getting all the business leaders in. And clearly, again, you are right. There is a huge amount of uncertainty prevailing, and especially with events lined up for today. And we'll have to see how they pan out.
No, but coming back to the point of the impact of tariffs, if tariffs do go up, I mean, I don't even know which iteration of the tariff war this is. Is second, third, fourth, 14th? Can't keep count after a point. But if there is an escalation of tariffs between US and Europe, and we don't have our trade deal so far, do you think it now starts to affect and impact Indian businesses, or are we relatively more secure?
So I don't know who has a control on tariffs at the moment. But one thing is clear, and there is a fair degree of recognition on that score as well, that India has to rely on domestic capabilities. It has to rely on domestic consumption, along with, of course, our exports and the rest of the world.
In terms of sectors where you see India really in a sweet spot, and you know we're speaking ahead of the budget as well, where do you think that growth comes with? Yes, you have the vantage point of looking at a variety of sectors, so you have some of that kind of an overview of where the growth really is coming from.
If you break it down broadly, for us it's services, manufacturing and agriculture. Keeping agriculture aside for a moment, services, definitely, there is a huge focus, and we've got a place in the world as far as talent and services is concerned, and we should continue to hold that. And I say this in light of all the developments we see on AI unfolding and which will continue to unfold next 2 years. I would actually also talk about manufacturing, which has been a focus of the government for the last maybe few years. And that, along with a supply chain focus, will show us results.
And coming back to the point of what we can expect or what you would hope to see in the union budget this year, considering how precarious the world is and how India can really be resilient.
I would say, without getting into specifics, I'd say we will continue our path of domestic consumption. And you saw a bit of that last year, and that should sustain, and you should see more of that whether it's in the budget or outside of that. But I think the focus that we have on domestic capabilities will continue.
We've also seen a lot of easing of taxation with the GST, rationalization coming in. I would say more than easing, a lowering of taxes. We have seen, of course, what is done with the income tax, now the labor code. In terms of compliance for businesses, do you think that we're seeing a period of maybe transition, which will be a little painful before the fruits begin to show?
You're right. We are in this phase where, end of the phase, you will see that it's much easier to have a compliant business. The approach is to stay compliant. It's part of ease of doing business. But we are in a phase of transition. If you backtrack a few years, all said and done after GST, there were things to be sorted out, and those dynamics have all now been sorted out. So you could say we are in the second phase of GST.
Okay. What has been the highlight of your Davos trip so far, Yesti?
It is, I would continue to believe there is dialogue. That happens definitely. India is represented fairly well, and I'm fairly proud of that, being here in Davos. A lot will be unfolded today with the events, but until today it is more around AI, and that is India's sweet spot as well. And one key philosophy or takeaway that I have now started developing is the very fact that India is building physical assets and infrastructure. Parallelly, India is building digital assets and infrastructure. And we are in a unique situation, a unique position in the world where we are building both of them simultaneously. What that means, what the opportunities are, we have yet to see.
I thought you were going to talk about one of the the after parties in Davos, which go on till the late night. That's very much part of what happens in Davos, if you have the energy to keep up. Thank you so much, Yezi. Great to have you here.
Thank you, Tamanna. It's a pleasure being here.
All right, so that was our managing editor, Tamanna Inamdar, straight from Davos, talking about how the discussions are going in Davos, and of course everything is about AI going forward. But moving on, NDTV Profit has been traveling across India to capture the mood of industries and people ahead of the union budget, which is to come on 1st of Feb. As a part of our Budget for Bharat series, we reached Indore, the heart of the country's grain market and a major hub for agro-processing. In this bustling ecosystem of mandis, mills and exporters, my colleague Sharad met with one of the region's leading processors, Sri Kailash Grain Mills, to understand the key demand trend shaping up in the sector. Sharad brings us the ground report from Indore.
Hello and welcome to NDTV Profit. We are at Indore and joining us is Pankaj Goyal. He's the Managing Director at Sri Kailash Grain Mills. A very warm welcome to you, and one of the largest players you are in this grain mills industry. Whenever we talk about the grain mills industry, we see about there's going to be a lot of people around, but I'm not seeing a lot of people around. A lot of automations are happening. Just explain us this process. How does this actually happen?
So if I talk about the grain industry, it's really transforming and it needs a lot of transformation. So we are talking about automation, and automation is mainly for consistency, and we are adopting a lot of the global technology.
Right now we are at the starting point of the value chain, I think. How does this process starts working? If you could just explain us.
So cleaning takes place through various equipments. We are removing the dust, we are removing the foreign particles. There are so many things which comes from the farm. And also we are taking so precise things where we are talking about even picking out the color defects in the wheat. So let's say in olden days, हमारी दादी हाथ से गेहूं बिनती थी. So even that is
separate आप लोग
yeah. So that is also happening with the technology where we have a machines who is already sensing the grains with the color.
Are they separating?
So this is the equipment which is separating the grains in terms of colors.
See, this grain has become almost automated. Well, what's the future here?
So I have visited various countries and in terms of wheat processing industries. So over there we are talking about the dark mills. So dark mill is
you spoke about dark mills.
Yes, dark mills.
That means there is no person involved in the factory.
Yes, there is no person involved in the factory. Even the lights are completely off for the power saving, where they are controlling the cost, and the whole industry is being automated to the tune that a person sitting on a computer can operate the industry.
There seems some concerns are still there. Industry is having some kind of headwinds.
Yes, certainly. I mean to say, being an agro-based industries, so always there is a lot of risk associated with the climate, and there is a lot of risk associated with the food security. So currently, the government is bringing a lot of policies every now and then, and we find there is a surprise every day. So we get a notification today, the exports are banned, tomorrow there is some stock limit. We have lost one of the very big market we developed in last 5-10 years.
And is this the export market you're talking about?
Yes, this is the export market. So we were one of the global players supplying to a lot of industries across Asia and the other regions. But since 2023, the exports are banned.
What's your budget expectations if you had to put into the government? What would that be?
In India, still the value addition is not as per the mark which is happening in the global standard. So to create this value addition, there is requirement of more stability in terms of a government policy, engaging with stakeholders, especially the industries, to have an outlook of the industry also. Certainly, government is doing a great work on balancing the farm side and the consumer side, bringing the price stability. But in this whole game of stabilizing the things, industry is really not able to survive. They're facing a big challenge.
We're talking about the consumer front.
Okay.
That's pretty interesting on that. But to put in perspective, what's so special about Madhya Pradesh and agriculture, especially the wheat front? Over here, I'm hearing a lot of different varieties of wheat. Where is being used? Is it just roti or something more?
So Madhya Pradesh grows very large varieties of wheat. So if you talk about for the chapatis, you have a sharbatis, which are specialized wheat, which is grown for good chapatis. You have a durum wheat, which is used for pasta making, for semolina, for halwa, for upma. You have other varieties of wheat which are good for bread making.
But Gen Z viewers, they are also very particular about the protein front.
Correct.
They seek protein in anything and everything. So over here, what are the protein related products which everybody wants to know?
So durum wheat is really a rich protein product which is used for making good quality pasta. As compared to the other varieties of wheat which are there in the market, the durum wheat has higher protein levels up to 11.5.
is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, उसमें इस प्रकार से बंकर या हाइडआउट बना के मेरा कमांडो ने बर्बाद करता है।
Shaky footage, guys. Apologies for that.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders, 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices.
It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets, we decode the budget for you, for your profit.
Budget 2026, the growth agenda.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
M3M presents NDTV Masterstroke Art Awards. An odyssey of creative brilliance, where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art.
Hello and welcome. You are watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and put the spotlight on one company that you need to have on your radar today. Before we move on and do all of that, it's important to look at which company are we talking about. It's a very, very hot sector, a very, very hot space right now, and that is the EMS sector as a whole. We're talking about EPAC Durable, a key company in the consumer discretionary space. They are key manufacturers AC, but before we do all of that, a little bit of history about the company. It was incorporated back in 2003, began as a contract manufacturer essentially of consumer durables, which includes AC amongst other key products. Now when you look at what the company has focused on, it has largely been the room air conditioner space, and even post listing, it was a meaningful part of the company's revenue and margins as well in that aspect. But post that, in 2012, they later transformed into an original design manufacturer. It essentially means that they designed the product for other companies in the AC space like Voltas and Blue Star, and designed the product as well, which is a high margin business. Now, this was of course founded by the Singhania and the Bothra brothers, and we will be speaking to Ajay D.D. Singhania in just a bit. But important to look at, what are the other clients that they focus to. So, all the room air conditioner clients like Voltas, Haier, Philips, amongst others, Godrej, Daikin, Havels are all the company's clients, and these are just some of them. When you look at the key products though, over the last few years, they have diversified away from air conditioners into large domestic appliances as well as small domestic appliances. The large domestic appliances do include products like washing machines, while small domestic appliances have water purifiers, air coolers, amongst other key products. This has been a key diversifier for the company, and that's very well visible in terms of revenue. Now, it's been a tough year for the company, largely led by a longer period of winter, shorter summer, a bigger monsoon. So AC sales do get impacted, and that's reflected in the 36% downtick that we've seen in the AC revenues. But because of the diversification in appliances as well as the other key segments like components, that has helped the company in somewhat way to reduce the losses. So while the AC segment is down 36% in terms of revenue, the total revenue is down only 15%, led by the high growth for the appliances as well as the component space. And that has been the one key differentiator. Although though, the key problem is that there have been a key concern on the financials of the company because of this aspect. Over the last few years, AC concentration has been key, but that has impacted the company's margins at this point of time. So when you look at the rating parameters, with the funds which we'll be focusing on and diving deep into what's impacted the business, is going to be key, because the company's share price is down 49% in this particular time frame, and we'll focus on a lot of that. But income statement, balance sheet, cash flow, return ratios, if you're a regular viewer, you know a bit about this. Shareholding, street cred, valuation, and finally, what do analysts actually make out of EPAC Durable? When you look at the first key parameter, that's income statement. Now, between the 3-year CAGR, if you see, the performance has been quite strong. 33% growth that we've seen just in terms of revenue. The EBITDA margins have also been substantially scaling to 7 to 8%. While FY25 did have a blip, it has been a good year overall on a 33 to 48% growth in terms of a CAGR growth, that is, in terms of revenue and profit. So why the neutral rating? In the last few quarters, it's been a difficult performance for the company, and margins as well as net profit has been impacted. Just for this specific quarter, Quarter 3 saw 427 crores in terms of revenue, but profits were impacted, and that's been one of the key concerns for EPAC Durable. We have been talking about the impact in terms of margins, but it's also important to look at the balance sheet as well. Now, we've been looking at the long-term borrowing as well as the other key aspect that has increased, and that's visible here. So while the equity portion and the reserves have actually increased going into H1 of FY26 as well, we saw stagnation of this number post FY25. But you look at the borrowing number, that increased and almost doubled from 62 crores to 122 crores at the end of FY25, and the H1 number is just for H1, so that's 33 crores. So there has been an increase in borrowings, and that's because of the increase in working capital. Lower AC sales, it means that the inventory is higher and a lot of money gets locked into that. Hence the company had to borrow quite a bit to include and transfer into that particular period, while the cash bank level has been quite stable at 44 crores, but from the FY24 level it has seen a quiet dip as well, and hence we've given this a thumbs down, and largely on the back of lowering the company's inventory as well as borrowing number is something to talk about. When you look at the third key metric, and that is cash flow, we have been talking about working capital as well as the impact of the business in terms of the cash flow from operations as well. So when you look at the cash flow from operations, it has increased to a highest level of about 257 crores in FY25. There you see the dip to 31 crores in FY26, and this is of course in FY25 this was H1 of FY26 we saw the dip. Also the operating profit, the operating cash flow to PAT is the other key metric. After a humongous increase, that has again come down to 56%, while the net cash flow has also been largely stable. So there are multiple key factors happening here. While some metrics are a positive, the cash flow from operations being impacted is clearly a big negative, but we've given the company a little bit of benefit of the doubt, given it a neutral rating for cash flow as well. The fourth metric though, that's return ratios. Now for a company the size and scale of EPAC Durable, there has been a pressure on the return ratios, and the story largely was as the company gets bigger, the return ratios will improve. While FY22 was a year we've seen reduction of the return on capital employed over the last few years. With the company's advent into larger appliances as well, the return ratios are expected to improve, but that has yet to materialize. So while it has improved from FY24 to FY25 level, we will have to wait for a couple of years at least to look at a meaningful increase because of these initiatives. So hence we've given this a neutral rating as well. The other key part is shareholding. It's been largely stable, one where the company has shown immense promise in not selling out at any point. So we've seen some selling between March 24 and 2025, but largely a little bit only at 47.18 company has been managed to keep it. What's also interesting is the increase in shareholding of retail as well as public investors. It's gone from 32% all the way up to 45% and shows the company's interest amongst retail investors. As the share price has corrected, that's also one of the key factors that retail investors do sometimes buy the dip, but it's important to keep track of the metric. While domestic investors have steadily reduced their shareholding, hence while we have given this a thumbs up rating largely on the back of promoter holding, there is a lot to look at in the changes between public as well as the foreign institutional investors and also the domestic institutional investors as well. When you look at the street cred, that's the other key part. It has been a disappointing picture for investors for EPAC Durable over the last few periods. When you look at the number over the last 1, 3 and 5 months, specifically the stock is down 14% in the last 1 month. It has been under pressure, largely led by what's happening in the particular space as well. But even in the 6-month period, the stock is down 34%, almost down 50% on a year-to-date basis. So that's just in the last 15 to 20 days of January 2026, and down 49% in the last 1 year. So investors have borne the brunt for EPAC Durable as they've held on to this particular counter. 5-year performance has to have some caveat that the company listed in February of 2024 since then has given decent returns, but given the large what has happened in the last 6 months, we've given this a thumbs down for now. When you look at final few metrics as we wrap up into looking at this aspect has been valuations. Now because of the stock price correction, FY27, the next year of financial year 2027, looks quite appealing in that sense at 30 times price to earnings for an EMS company, that too. While price to earnings is also visible of that, the EPS is expected to be impacted in FY26. Now last year the company in FY25 did about 5.6 rupees in terms of EPS. Consensus estimates are down to just 3.4 rupees, and hence the higher price to earning metric in FY26 compared to FY22, where hopefully the growth comes back. But because of the share price correction, analysts have, while reduced their target prices, continue to maintain their buy ratings, and that's visible in the calls as well. So they are seeing a return potential of almost 33% as we speak, and hence we're continuing to see that positive momentum, at least from the analysts at this point of time. But it's also important to look at what the company also has to say at this point of time, and we have the management which will join very, very shortly on this aspect. So you have seen that the company's performance has been impacted. Q3 also had a lack of growth in that sense. So it's important to speak to the management as to what they think could be one of the key positive metrics for the company. Before we do that, the final ratings, income statement, cash flow as well as return ratios do get a neutral rating. Balance sheet, the company will have to improve on that aspect. While the other key metrics, if we can pull that up very, very quickly, shareholding is a positive, valuation a neutral in that point. For FY26, we need to look at the growth, while analyst as well as analyst recommendation has been a key positive. So the overall rating we get at 4 out of 8 for EPAC Durable as well. But to discuss in detail about what the company is all about, and we have spoken to Ajay D.D. Singhani in the past, let me welcome the MD and CEO of EPAC Durable at this point of time. Mr. Singhani, a very good morning to you, sir, and thanks so much for joining in. It's a real pleasure to talk to you at this point in time, because while Q3 was a tough quarter, you did mention a few positives about you that the company has looked at, and certainly that investors need to watch out for as well. But largely my first question, sir, the last 3 quarters, the first 9 months of FY26, you managed to do a decent performance. But to start us off with, what is the current picture of inventory on the ground? Have you seen reduction in this particular quarter, and is it coming to a level that's largely normalized, or what is the expectation of normality for inventory over the next few months?
So, good morning. In regards to the inventory normalization, yes, Q1 and Q2, because of the unseasonal rains, we had inventory being piled up both in trade as well as our end not getting manufactured. But thankfully, Q3, we saw the uptick, and the inventory movement has definitely started. The order book has been good, and going forward, next 6 months onward, the season sets in. So the market is very bullish that the past is behind us, and the tailwinds are still very strong for the industry. So at 15 to 20% kind of a growth is what I've been repeatedly saying is on the cards for the industry for the coming 26 season, and shall continue for next 5 to 6 years, definitely. So next medium to long term, definitely the tailwinds are very strong for AC.
Got that, Mr. Singhani. And you highlighted that over the last couple of quarters, it has been that the industry has been impacted largely because of higher inventory amongst other key issues. But in the short term, what can be the expectations from Q4? Because it is a quarter where a lot of inventory is built in by the AC makers. Is there expectation that that is visible, at least to you in the conversations of the first 22 days of January, that Q4 could be a decent, at least flattish on a YOY basis? How should we see this?
So Q4 definitely we see growth compared to YOY basis. Q3 also has been a growth, and Q4 again we see a growth and recover partly whatever was lost in Q1 and Q2. So Q4 will definitely be a quarter wherein we'll see a lot of recovery happening, although it will not be possible to recover the entire sales loss. So as a whole, on an annualized basis, we see that the industry is going to witness some shortfall as compared to FY25, but yes, largely recover the loss of the previous 9 months.
The other key aspect, Mr. Singhani, has been that last Q4 of FY25, you did about 650 crores of revenue. Now you are mentioning that you are expecting to seeing some growth at least. So could we expect a low double-digit kind of growth expectation? Now I know you can't pinpoint it, but is there expectation of that at least?
Definitely yes. So what I'm saying is the loss of the previous 9 months partly is going to get recovered, although the entire sales loss cannot be. But yes, we are looking at a ramp up in Q4 and cover a lot of ground here.
Is the expectation largely that with this, you will be able to at least have flat revenues for FY26 compared to FY25, because it's a big number that you're aiming in quarter 4 of FY26. You are aiming for almost 700 to 800 crores of revenues. You did about 650 in the in quarter 4 last year. So is that the expectations from you as well? And what could be for margins as well, if I can slip that question in as well?
Yeah. So broadly, yes, the guidance is that we are looking at the number you just mentioned. So recover a lot of lost ground on the AC, as well as our other levers are firing very well. So for us, the small and large domestic appliances will component business is something which is helping us cover a lot of lost sales. And at the three new diversified segments for us, the LDA, SDA and components are growing at multifold. So that's what we see as the growth lever going forward as well.
If you can also talk about, in terms of parts, because we've seen for AC specifically, you have diversified into newer segments as well, and that's very visible in the components growth for you. But before that, has there been increase of raw materials because of copper amongst others? How are you navigating that challenge?
So overall, if we look at the AC prices, there has been correction on two fronts for the coming quarter, and definitely the street, I believe the brands are going to increase the prices or have already increased the prices. So it's on two counts. One is the upgradation in the BE norm. So that's like the previous 5-star becomes a 4-star and a 3-star becomes a 2-star. So there is upgradation because of the price correction because of that, which broadly like 4 to 5% kind of a price correction. And then another 4 to 5% is the price correction because of the commodities, what was done in the last quarter. So overall, we see close to 10% price correction in AC. And any further impact of commodity definitely gets passed on in the next quarter.
Also, Mr. Singhania, one of the biggest developments that happened in the industry has been the ECMS scheme that has come in. Now, we've already seen a few companies get into PCB manufacturing and get approvals as well for it. What has been EPAC's plan for ECMS? Have you already applied and are awaiting approval right now?
Yeah, so we have floated a separate subsidiary company called Bumjin Audio Products Limited, wherein we are targeting to manufacture a lot of audio parts, components, sound bars. So that's a part of our application under the ECMS scheme. And the structural approval has already been there, and now we are filing for the further complete plan and everything.
Mr. Singhania, if you can talk a little bit about your subsidiary, as you mentioned, is that largely into audio, or is this something specific to ACs as well? If I can just harp on that a little bit, is it also into PCB manufacturing, or that's not included in that?
So PCB is currently under our current company portfolio. So we already do PCB as an EMS. We make controllers and supplies the component. The specific subsidiary we're talking about, Bumjin Audio Products, is a JV with a Korean company called Bumjin. And they specialize in making audio components and sound bars, TV speakers, Bluetooth speakers, and all these things. So we are under currently planned to start manufacturing by the end of 26 or probably Q4 of 27 and start selling these products in India market.
So is there any plans of venturing for ECMS specifically into a new facility for PCB manufacturing? Is that something that you will take it as time comes? Because at this point of time, we've already seen approvals come in also for a few companies. So what is the expectations for EPAC specifically going into ECMS via your PCB manufacturing?
So PCB manufacturing is what we already do under our current facility.
So is there another level of capex that we could expect from you to increase capacity? Because and we've spoken to you previously on this, that India is still very deficient in terms of a lot of parts that go into both for ACs as well as for other related electronic products. So the opportunity is quite huge in PCBs, right? So is that something that you've thought about, and any rationale of not going into it as of now, currently as we speak?
So we currently do a PCB assembly, so not the bare board, but we do the entire component, the controllers. And as we scale up our operations, definitely we'll start doing more of PCBs in-house. So currently we do for air conditions and our small domestic appliances. Going forward, definitely yes. So the expansion and backward integration would continue, and scale up will happen as and when required. So that's something definitely a focus sector as our component business is increasing. Investments in PCB controllers, the assembly lines will continue to be ramped up under the current facility itself.
The other thing, Mr. Singhania, has been your advent into your LDAs, SDAs, as well as components. Is the expectation that all three of those specifically will have roughly around 30 to 35% of your revenue in FY27?
Probably more than that. So we continue to grow in AC more than the market. So if the market grows at 15-20%, definitely we will outgrow the market. But at the same time, we believe that our SD and LD and as well as the components have potential to grow multifold. And in the medium to short term, we are looking that our AC is like current year, it has come down to almost 60%. We will try to maintain it 50-55% and outgrow our other sectors like the SD, LD and components. So that should overall contribute to almost close to 45-50% in 27-28.
Now, Mr. Singhania, just a couple of key updates, and you've spoken about this to us in the past. The one is on Hisense. It's a big project for you. You mentioned that almost 8,000 crores of revenues could be accrued over 5 years once the project starts. So the earlier expectation was that project would start in December 2025. You've now said March of 2026. Is that timeline on as we speak?
Yeah, definitely that we are on bang on timeline. So we had maintained earlier that December is the timeline where we're looking to start the trial productions. The trial productions have been successfully completed. We have got all the approvals in place, and the current quarter, which is Q4, we are looking at to ramp up productions. So everything is on time. And our ODM sales to Hisense for the AC has already started since last year. And now the Hisense designed product is what is going to get manufactured in the new facility, the new greenfield facility. The facility is ready. The trials are done. Everything is online, on track. And this quarter, probably next month is when we are contemplating that the mass production will start.
Mr. Singhania, what would be the products that would come out first out of this? Because apart from ACs, there are other related products with Hisense as well. So what would be in just for FY27, if we can talk about in that year, what is the expectation of the products to start with?
So the new facility, the greenfield facility, we are starting the Hisense designed air conditions, which are a complete tech transfer from China in the next month. And then going forward, washing machines, both top load and front load, are going to start within this calendar year 26 itself.
The other aspect, Mr. Singhania, has been on washing machines. Now, that has been a product that's been with you over the last 3 to 4 quarters, but probably what's happening on the street is that the accretion that was expected compared to other EMS players, and unfortunately you are in the industry of comparison, has been one of the key focal points for investors. So for washing machines specifically, while you mentioned about large domestic appliances being a key growth area along with the other two segments, specifically for washing machines, is there any revenue targets that you can give us over FY27?
So the good news I'd like to share here is for the washing machines, definitely, yes, there was some delay in getting the approvals from the customers, but now that is all behind us. From Q4, we have already onboarded, got the approvals for 2 marquee clients, and the production has already started and ramped up in the current quarter. And we see significant quantities and revenue targets. We will definitely revise upward when we do the earnings call for the next for the final annual results. So that's something I'm repeatedly saying that LDA is one segment which we see will grow at a much rapid pace.
And so Mr. Singhania, you've given us a breaking news, at least on the show today. You've given us something that you've not said anywhere before. So I'll take it with both hands. The other aspect of the smaller domestic appliances as well, the expectations that while it is a higher margin business, because of the prices of those products being so low, it's a big volume game, and it's something that's while you have been an ODM player, you've always been a technology player as well. So the volume game hasn't been one which you've fought with other players. With SDA, that strategy changes a little bit. So any rationale that you can give us in terms of entering that hyper competitive space, and what do you make of it?
So our competitive strength here is our, like you rightly said, the scale and maintaining the leadership position in the appliances, the large appliances like ACs and washing machines. Definitely we see will take leadership role in next 2 to 3 years. For small domestic appliances, I think the code we have cracked is not about volumes alone. We want to also increase the width and the basket of offerings. So we have a roadmap wherein we are going to introduce a new product, almost 1 to 2 new products every quarter, and increase the basket of offerings. Because that not only helps us cater to the versatile demand of the customer, but also kind of balance the seasonality and balance our quarterly revenues. So the whole idea of what we have been working on is to have uniform, continuous revenue stream every quarter.
Well, Mr. Singhania, you've been very, very honest and upfront to us about a whole host of issues that you are trying to track, but appreciate your time here on NDTV Profit. We wish you the best hopefully speak to you once you'll speak to us again when Hissan starts production in March. So a lot more talking, a lot more numbers at that time. But thank you and appreciate your time here at NDTV Profit.
Thank you so much. Thanks a lot.
Well, that's largely, on EPAC Durable specifically, a key company in the ECMS space. In the EMS space specifically, looking to enter ECMS as well. But that's all the time we have on KYC. Stay tuned. A lot more action on the other side.
Agarwal Packers and Movers Limited. Man with the cap. Not 300.
तेरा ये बिजनेस एक मास्टर स्ट्रोक है यार, है ना? पर मुझे लोन कौन देगा यार?
बैंक ऑफ बड़ौदा देगा तुम्हें एमएसएमई लोन। बॉब डिजी उद्यम के साथ 100% डिजिटल प्रोसेस, अप्रूवल इन मिनट्स। बैंक ऑफ बड़ौदा से एमएसएमई लोन लेना भी एक मास्टर स्ट्रोक है।
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of the conversation. And this year, Suzlon, a leading global renewable energy company powering a greener tomorrow, comes on board with us as we spotlight ideas shaping a sustainable and innovative future. Suzlon co-presents NDTV Ignite at Davos. Your access to the world's thinking room only on NDTV network.
माही भाई, कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
Really cool.
SBI, the banker to every Indian. Truly.
A new era in luxury living. A celebration like never before.
This is going to be shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete. Charged with excitement and energy, on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices.
It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets.
India is the fastest growing economy in the world, has been for a while. But what does that mean for a non-resident Indian? 2025 has not been the best year for markets. Well, not here. The rest of the world has been just fine. But the long-term wealth creation and more importantly, the return potential for India is up there. The question is, should an NRI dedicate a large portion of their investment corpus to India? And if so, what should they bear in mind about portfolio construction, about taxes, and the rules related to repatriation? That is, in the event that they don't intend to come back to India. There are some places where you even get taxed at 0%. Joining me on this episode of MoneyWise is Shalini Sekhri, the Chief Executive Officer of Renaissance Investment Managers. Shalini, welcome back to the show.
Thanks so much, Alex. Always fun to be here. Thanks for having me.
And this is right down your alley. In the past, we've spoken about, retirement, and we've spoken about certain other aspects and inheritance and various other things. But today, I'd like to ask you, you're speaking to a lot of people who invest from outside into India. Is India currently a hard sell for you?
So, Alex, India continues to be one of the most exciting economies in the world. And as you know, markets follow economies. We are in a phase that we call the economic miracle. So I don't know if you've heard that. But it took us, 65 years to add the first 4 trillion of economic output, what we call GDP. And all reports suggest that we will add another 4 trillion, doubling from here in just 7 years. These phases come maybe once in a century in a country's history. And I think we are blessed to be alive at this time and to actually be seeing all of this play out. We all know that India is today the 4th largest economy. In spite of that, we are barely about 3.5% of the world's GDP as we speak. I think in under 10 years, that number would go to 7%. We would be a 10 trillion GDP economy. So I think these 15, 20 years are what we all call the golden years of the economy. And I think the bigger risk today is to not be in India rather than to be in India. As we know, stock markets do follow the economy. And if you look at the numbers, they've actually been stunning. So the last, say, 20 years, 10 years, 5 years, anywhere between 13 to 15% annualized GDP, annualized return at just a Nifty 50 level. We're just talking about the index. So when you kind of look at that, I think it makes us the second most large economy with those kind of returns after just the US. So for any international investor, whether a non-resident Indian or even a global investor, honestly, there's no getting away from India. So while there will be a lot of short-term noise, for the first time in history, we've been both in a physical as in a geopolitical war all around the world and an economic war. So when the largest country in the world unleashes trade wars on every country in the world, it is an economic war. So this confluence, I think we've probably not seen since the Second World War.
Yes.
So while there will be all of these noises, we all know that the best time really to start your investments is when you get these very brief opportunities in time to really, enter at the right point. And as we were discussing, smart money or the knowledgeable investor is really taking the bull by the horns, and we do continue to see that money flow in. Maybe the more retail investor is still trying to be a bit cautious, but as they say, you invest when others are fearful, and that's when you really make good money.
Okay, that's well answered. And even if it is a hard sell, I think you're doing a pretty good job, Shalini. So let me ask you this then. And before we get into portfolio construction and what you're talking to your clients about, when you are a non-resident Indian, I suppose what you're thinking about is what you need the funds for. Of course, you need it for what everybody else needs it. But are you going to take the money out eventually, or are you going to keep it in and move back to India? Is that something that you say is the first thing that you think about?
Sure. So portfolio investing can happen whether you intend to move back to India or not, right?
Okay.
So I think that all options are possible. But when you look at investing in India for NRIs, I would say as important as the product basket is really for them to understand how you route your capital, right? How repatriable will it be? How do you avoid tax leakages? And how is this going to compound in the long term?
Okay.
So I would say this is an equally critical part of it. And then obviously your decision on where to invest will get colored by, do you eventually want this money in India, to come back home when you retire? Or do you want to take all of this back out and have the money, freely moving between countries?
So let's look at each of these, because you talked about, and I hope I remember correctly, you're talking about the route, you're talking about repatriability, and you're talking about tax leakages, right?
That's right.
So let's talk about each one of these three issues so that everyone's on the same page. When you talk about routing of the money, you're talking about how you deploy money in India. How do you deploy money in India?
Sure. So there are two basic types of bank accounts that you would set up in terms of the infrastructure you require to really invest in India, right? One is the non-resident external account, or what we call an NRE account. This would be for money that you have not earned in India. So any money where the source of funds, which has been earned outside India, is freely repatriable. So ideally, you need to set up an NRE account in India, bring money in there from wherever in the world you have that money. You can invest it. And in most instances, the principal plus the return can be freely taken out because this money to begin with was not earned in India.
You said in most cases, are there restrictions?
There are, for example, in rental income, the rent, because it's earned in India, though your original purchase of the house might have been from, money earned overseas, the rent has to come into an NRO account.
Okay.
So the other kind of account being a non-resident ordinary account. This is for income earned in India. So you might have, say, sold shares in India, you might have received an inheritance, you might receive rent.
So what about dividend income?
So dividend income on shares that you have here would come into an NRO account.
Interesting. Okay.
Yeah.
Okay. So go ahead. So you have to create this NRE account, but you also have to have an NRO account.
That's
if
right.
If you're earning, and so if you're, I would guess if you're earning through mutual funds, you would generally not suggest a dividend option. You would choose to have it as a growth option in most situations.
So there are other interesting exceptions, right? So NRIs, for example, if they have NRO money in India, which is invested here, the dividend and interest part is freely repatriable.
Oh, interesting.
There's no cap. Otherwise, as you know, for even NRIs to take money out, there is a, liberalized remittance scheme limit, which is $1 million a year, right? But this does not count under that limit. So which means that if you earned a dividend or an interest income, you can take it out from shares. Or, a fixed deposit interest, for example. So there are all some of these textures to, some of the underlying. But largely, I would say the broad rule is if you have earned this money outside and brought it into India, into an NRE account, you can take it out freely. Alternately, you've earned it in India and it needs to stay in an NRO account and it's for your use in India.
Okay, so this is routing. Where does GIFT come into play?
So GIFT is a big subject. So this is a new concept that was set up a few years ago, right? Basically to rival the great financial centers of the world like Dubai, Hong Kong, Singapore. So what the government of India has done is it has set up something called GIFT, basically stands for Gujarat International Finance Tech City.
Yeah.
It is
GIFT is easier.
Yeah, it is. It's set up as a free trade zone, so to say, for financial services, which means that while it is in Gujarat, India, and within the borders of the land, it is treated as an international or a foreign jurisdiction. And it has its own rules and regulations, and they have tried to make it extremely attractive from a taxation and an ease of doing business for NRIs and other foreigners as well to come into India and invest in India. Similarly, Indians can use this route to also invest internationally. So Gift City is another place that you can use, and taxation is an incredible benefit if you use the gift route, and we should talk a bit about that.
We will eventually, but so in terms of routing though?
So routing, clients can set up a multi-currency bank account in Gift City. So there are all the large banks, including ICICI, HDFC, all of these that are today present there. You can open a bank account there, and you can bring your money into a Gift City bank account. This is again fully repatriable. There are pretty much no restrictions because in a way it's not in India, right? By its, conceptually. So that becomes again very easy for clients to move money in and out. And all the large broking houses, asset management companies, mutual fund houses have set up operations there. So you can really access a very wide range of products by using the Gift City route. One is to bring money, but then also have access to investment products.
Okay, so therefore, is there anything else that somebody should know about routing money into India? If you have the option, should you opt for gift as opposed to a traditional route?
So it really depends on what you're buying and whether those options are available currently as we speak in gifts. So that's number one. Secondly, it also depends on whether you eventually do want to move back to India, in which case you may be fine using the NRE route, because then you've already established a banking relationship in India. You get to know your bankers, you start building a corpus there. So to that extent, I would say if you're unlikely to return to India, gift would be the logical choice. If you do intend to move back, then I guess it really depends. India and an NRE account may also make sense. But I think from a tax benefit perspective that investors are currently enjoying, gift may still make sense. You can eventually still bring the money to India, right? From
Interesting.
Gift. Yeah.
Moving to the second point which you made, which was repatriation, and you've already spelled out the fact that a lot of the money that you invest from outside in can be repatriated fairly easily. Is there anything else that somebody needs to bear in mind? Are there off cases that you need to pay attention to? And two, if you do decide to move back to India, when you do, is there a process for you to follow to move those monies outside of the NRE into a normal account?
So eventually, to take your second question first, the NRE accounts or an NRO account eventually will get converted to a resident India account, right? So eventually, your status, once you come back, one of the first things you do is really to fix your KYC, because you would now have a resident Indian address as opposed to an overseas address. Your bank account status needs to change. So all of those processes have to be, gone through eventually. And the same account tends to morph into the resident Indian status. So that's all easily done, via the banker. In terms of routing, I would say I think we've pretty much covered everything. Clients, of course, will also have to kind of take advice, I would say, from their advisors back home. Are there any complexities in terms of, so while we do talk about, say, preferential taxation, very often, in spite of having a double taxation avoidance treaty, because the rates of tax are different in different countries, the investor back home may still be liable, say, to some taxes. So he may decide whether he wants to route the money back, he wants to leave it in India. So all of those will come into play, because there are a lot of countries where tax rates are significantly higher than what we have for, say, capital gains in India, right? And they would need to pay that differential tax back home. So
because you speak about it from the perspective of a Dubai or the the UAE, and you say that, it's 0% there, so it's a big benefit. But the opposite is also true. You could have situations where long-term capital gains is more than 12.5%.
There certainly are many, many countries where it's much higher, in excess of 30-40%.
Wow.
Yeah. So that's something also the investor needs to keep in mind, that where does it make sense for him to hold this money? And especially when investors are planning to move back to India, it's a lot of decisions around where you want to crystallize your capital gains. Is it beneficial to do it when you're still a resident of your current country, or is it better to then change your status and then, create your capital gains? So this is tax is a complex subject. It depends on where you live and, all of that. So
the beauty of these investments, of course, is that you can pay tax whenever you do redeem, and there's nobody holding a gun to your head, hopefully, and asking you to redeem. But so we've kind of covered the tax aspect as well. Do you want to talk about the Gift City angle here with regard to the tax aspect?
Sure. So there would be, I would say, 4 or 5 key parameters where there are differences between coming into rupee products in India onshore versus investing through Gift City. And I would say the big game changer is that capital gains tax if those funds are registered as what's called a specified fund under a certain income tax regulation, is subject to 0% capital gains tax. So let's take an example of, say, a Dubai investor in this case, right? So he invests in a mutual fund through a fund of fund structure in, say, GIFT City, and that fund does only one thing: it buys units of an Indian mutual fund. Now, because of the tax breaks or the tax advantage given, when an investor redeems his units in, say, GIFT City, there'll be no tax on the Indian end because there's no TDS for GIFT City. And GIFT City has no tax, and Dubai has no tax.
Right.
So you've used a mutual fund vehicle, you've used the GIFT City benefit, and the fact that you're from Dubai or Singapore, Hong Kong, these are countries where there's no capital gains tax. In effect, you've had a zero tax capital gains investment.
Wow.
Which is really, huge. So that's on the short-term and long-term capital gains taxation. The other big benefit is that in GIFT City, there is no tax deducted at source. Right. So for non-resident Indians, one of the big disadvantages is that whatever is the tax payable, which can be as high as 30% when you redeem a debt fund, it's all deducted at source.
Right.
And then if you have to claim it back, you have to go through the whole, tax process of claiming refunds.
Yeah.
GIFT City, there is no TDS, which means you're then just subject to whatever is the tax in your own home country. So if it's a rate that's better than what it is in, say, India, you have this huge benefit that your money is not held back at source, right? So that's a second huge benefit. Thirdly, there is no GST in GIFT City.
Okay.
Which means that all your management fees that you are paying to managers like us do not attract that 18%, GST, right?
Okay, which is a considerable saving.
Which is a saving. And then there's also the STT, which is a transaction tax every time you buy and sell an equity share, which does not exist in GIFT City.
So there are several considerable...
So there are several benefits which have been given because the government is obviously trying to promote GIFT City. They are wooing actively, Indian fund managers who are based in, say, Mauritius or Cayman, all these traditional places to come to gift.
So one of the aspects and the reason why perhaps the government is doing this is because it wants that foreign capital to come through, right?
Absolutely.
It wants dollars to come through.
Yes.
And so therefore it's important to talk about currency as well.
Yeah.
We're speaking at a time, Shalini, when the rupee has been facing a spate of terrible weakness. And this is a sign of the times. The external scenario is uncertain.
Sure.
Tariffs and the threat of tariffs exists. And so with that context, the rupee has slid, but it also means that a foreign investor investing in India has lost out to a certain extent. Is that something to bear in mind, considering that with inflation where it is, and of course last year is an aberration, or the current scenario is an aberration, but if it hovers around that 4.5% level, at some point there is going to be rupee depreciation, so you'd have to shave that off of what you're earning, right?
Off your return. So about 3.5% has been the long-term rupee to dollar depreciation, right? And I think most international investors do keep in mind that that is going to be a leakage on the return. And in spite of that, the kind of returns that you see in India is so compelling that still makes a lot of sense. A lot of people do ask us that why don't you hedge the currency risk, right? And the simple answer to that is that the cost of hedging is so high. And that's a fixed cost. It's not open to interpretation.